Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading. Here are your headlines. The Dow and S&P close at record highs as market attention turns to the Fed and the all-important dot plot. European futures trade higher. Europe's vaccine campaign in turmoil. Germany, France and Italy suspend use of the Astra vaccine. Health ministers meet today. Plus, Volkswagen targets 1 million electric car sales this year as it looks to unseat Tesla as the dominant EV maker. We've been speaking to the CEO, Herbert Diess, about the big push for the future. Let's take a look at equity market futures right now, and they have been pointing to the upside. FTSE futures up by 0.6%, Euro Stocks and DAX futures up by around 0.4%. So we are expecting to see some gains this morning. European equity markets then playing a little bit of catch-up compared to the US session of yesterday, where we saw those new records coming in for some US indexes. The Asian equity session, we've seen buying stocks and also buying bonds, and a little bit of a drop down in treasuries. Treasury yields on the rise again, but not moving all that quickly, and for many people it is the pace of those moves in treasury yields that matters so much. We're still around the 1.6 level, so 1.6092 if you want all of the decimals on the US 10-year yield right now. So European equity markets getting out of the gates and opening, as you can see, just to the upside. We've got European equity markets up by around 0.25%. The FTSE 100 up by 0.6%, despite a negative oil price, which can weigh on some of those large energy businesses. The CAC 40 up by 0.25%, the IBEX up by around 0.6%. So European equity markets opening to the upside. That is as Europe's vaccination push is sinking further into disarray. Some of the bloc's biggest countries have suspended use of the AstraZeneca vaccine. In a coordinated step, Germany, France, Italy and Spain have halted use while the European Medicines Agency conducts a review. Findings will be released on Thursday. Of course, the guidance from the WHO has been to keep using the vaccine. Joining us now is Melanie Baker, Royal London Asset Management Senior Economist. Melanie, really good to speak to you. So this is something that has preoccupied markets a little bit increasingly as the days have gone on. You saw one country do it and then another, despite the guidance from many in the medical profession, many of the regulators that suggests it would be better to keep using the vaccine whilst these investigations are taking place. Anyway, we'll learn more on Thursday. I wonder from an economist perspective how much we are seeing now delays to the European recovery, delays to the European growth story as a result of the slowness of this vaccine rollout.
And I think it is significant, particularly when you can compare it to the US and UK, where the vaccine rollout has been very successful, very quick, and gives increasing confidence to a sort of strong second half to the recovery. So the euro area story does look a bit challenged from that perspective. However, I'm hoping that these vaccine delays are going to be very temporary. As you said, they're going to be looking at this and announcing something on Thursday. And I'd expect the sort of deliveries of vaccines to be stepping up in coming months. So hopefully this is just a temporary thing and we will still get that sort of strong second half recovery in the euro area, but this is a challenge for now.
Yeah, I'm wondering if that's still your base case then. Is it still the base case that the second half of the year recovers well for European economies? Give us the wording that you would use. I'm asking this because of the delays to the rollout of the vaccine, but also the Bank de France has said that it expects a better 2021 recovery than it had previously forecast. So it sees things as improving, that the French economy will avoid a steep second dip because it has avoided a full lockdown this time around. What are your expectations then for Europe in that regard, Melanie?
Yeah, look, I do worry that with COVID cases rising in the euro area, we may get a bit of a setback in the second quarter of this year. But the vaccine rollout is continuing. I am expecting it to continue in the euro area. It has been building. And I still think that we're in line for a stronger second half at the moment. And that's going to be helped by better global demand. And of course, things like the US fiscal stimulus package will also help external demand for the euro area too. So I think it's still on track, but risks have risen.
And what do you expect the ECB to do in response then, Melanie? I mean, so far the messaging has been that they'll bring forward some of the purchasing in the PEP, but they won't increase the size of the PEP, the emergency bond buying tool that they brought in during the pandemic last year. Is that's still the expectation, I guess, because it was only very recent. How much further setback would you have to see to the European story for that to change?
Gosh, that's an interesting question. I think another certainly a significant setback, but I think the next step, as you're sort of hinting at, might be to extend the envelope for the PEP even further if that is the case. But my central case, as you point out, is for no further action in that sense. But certainly, again, the risks are rising.
Thanks very much, Melanie. Stay with us. Melanie Baker, Royal London Asset Management Senior Economist. We'll be back with Melanie shortly, and we'll focus in on her thoughts on the UK. 10-year inflation expectations climbed to the highest since 2008, ahead of Thursday's Bank of England meeting. That discussion with Melanie next. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 7 minutes into a trading session that is broadly positive for European stocks. Let's get a look at some of the stocks that are on the move this morning. Bloomberg's Danny Berger is with us. Danny.
And the biggest mover on to the upside for the Stock 600 so far this morning is Zalando, upgrading its forecast, now sees a 29% growth for the quarter in terms of revenue. So online sales staying strong despite some normality returning to the world. Nokia, another stock that's been moving to the upside, job cuts, cost cuts, those sorts of things helping sentiment so far this morning. Always interesting to look at Nokia because that is one of those meme stocks we've seen trade with a lot of retail traders. Finally, NatWest has been waffling between gains and losses over the past few minutes. At the moment, down 0.5% with the FCA investigating over complying with money laundering rules. Finally, I want to take a look at the broader market. All eyes continue to stay on what the FOMC is going to do tomorrow. I wanted to point out small caps, which is over here, Russell 2000. It's down today. This would be its first day of losses in 7 days if it continues at this pace. So a breather in some of the rallies we've seen in that more cyclical name. I also just want to point out Bitcoin, the bad boyfriend of the crypto world, at $55,000. It hit a record over the weekend. Some of the commentary I've been reading seems to suggest that that stimulus check perhaps was overly priced in, that the thought that people would use that money to buy Bitcoin is now sort of dissipating. So Bitcoin unable to hold on to its record high price, Anna.
Yeah, that's a really interesting association, isn't it, those stimulus checks and Bitcoin. Danny, thanks very much. Danny Berger with the latest on these markets and what she is seeing this morning. Let's focus on the UK now. And market-based inflation expectations rose to the highest level in over a decade. The 10-year break-even hit 3.48%, a level not seen since 2008. Melanie Baker, Royal London Asset Management Senior Economist, is still with us. Melanie, we've been watching these market-based assessments, assumptions, pricing in of inflation expectations for the UK. How concerned are you about UK inflation given what we see in 10-year break-evens?
I'm somewhat concerned, I guess not necessarily because of what we can see in break-evens, but I think there are significant upside risks to inflation in the case of a strong recovery, and I think you can increasingly make the case for a strong recovery in the UK, with vaccine rollouts going well, COVID numbers low, keeping the government's plan for an exit out of lockdown on track, because we have more fiscal stimulus added from the Chancellor just recently too. So I think it is an increasing risk. That said, I think if we did have a sustained rise in inflation and inflation expectations, with wage growth picking up as well, I wouldn't expect the Bank of England to just sit back. But I think we're away from that at the moment.
We're away from that. It's interesting when you think about the way that the Bank of England has responded to rising yields, the global rising yield environment. Of course, we've been focused very much on treasuries, but of course, this has had an impact here in Europe. We've seen the ECB try to push back a little bit against those rising yields, whereas the Bank of England has done more of what the Fed is doing, which is to suggest we're not so worried because this is all for the right reasons. This is about improving growth expectations. How would you see that strategy from the BOE playing out? Do you think that is the right message to be adopting at this point?
I think it's okay for now. In its sense, as I said, I think the UK outlook has improved, so it does make sense that bond yields are somewhat higher. But it is a fine line for central banks to tread. Clearly, the recovery is far from complete in the UK. We saw that just with the last set of GDP numbers and how far we are still below pre-crisis levels of output. And what you don't want is bond yields moving so far and so fast that you cause a significant tightening in financial conditions that are just too much for the economy to cope with, or inappropriate for the economy currently. So I think that there is a fine line to tread. I think what will be interesting in the minutes this week is whether the kind of more relaxed attitude that we've seen to all this from Governor Bailey is true of all the other MPC members as well. Whether there have been any differences of opinion on that one.
Pivoting to the US, Melanie, we've already mentioned it in passing, but the recovery there and the fiscal stimulus, the size of the fiscal stimulus that we've seen there. We spent a lot of time asking guests whether they think we're going to see an overheating in the US economy, and we've heard various views. And I wonder to what extent you think a plan to increase the tax take in the US can push back against that overheating, or is the latter going to be just so much smaller than the fiscal stimulus that is not significant? What is the balance of risks, do you think, for the US economy?
I think at the moment the balance of risks is somewhat more towards the overheating side. I mean, it's not just this last packet, this last fiscal stimulus package, which of course a lot of that is just continuation of the stimulus that we've had in place already. But the fact, there's widespread expectations of another fiscal package later this year, centered more on infrastructure, which may be even more providing more stimulus and over a longer period to the US economy. So yeah, I do think there are some risks there. And of course, on the inflation front, you have a central bank that has an official inflation averaging framework and has said they will be tolerant already of some inflation overshoots. So I think they're in a different position to some other, particularly the euro area economy.
And of course, we're going to hear from the Fed this week, Melanie. What's going to be your focus on the monetary policy side? A lot of people talking about supplementary leverage ratios and the dot plots and these specifics and what the messaging might be here. More generally, is there an expectation that we hear the same message from the Fed, that this is all for good reasons, yields go higher, and as long as it's about stronger economic growth, the Fed doesn't mind too much? What's your expectation?
Yeah, I mean, my expectation is that we do get a sort of fairly consistent message, the one that we've had so far from Powell. So, yeah, it would be exactly that, really, that so far the rise in bond yields that we've seen is consistent with a stronger growth outlook, but they may be quite clear about what it would take to cause a reaction, or more clear about what it would take to cause a reaction. And that will be again sort of centered around disorderly conditions in markets and financial conditioning that's just gone, financial conditions that have tightened too far and inappropriately. We may get a bit more color on some of that from the Fed. But I think the message, as you say, from the dot plots from the forecast will be interesting as well. We may get a couple more participants, for example, penciling in a rate hike before the end of 2023.
Okay, we'll focus on the dots. Melanie, thanks very much. Melanie Baker, Royal London Asset Management Senior Economist. Thanks very much for spending time with us this morning. Coming up on the programme, we'll talk about a sector that's very interested, of course, in what the Fed has to say. We'll focus on banks, but for another reason. A big day of news from the banking sector. Credit Suisse reports its best start to a year in more than a decade. While here in the UK, the FCA has started criminal proceedings against NatWest. Details next. This is Bloomberg.
Expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the European market open. 18 minutes into your European trading session, and European equity markets move to the upside. Just a little bit of breaking news coming through in France. France begins the sale of a new green bond for the first time since 2017. So we'll keep an eye on the rollout of green finance more generally. Sticking with the banking sector, Bank of America CEO Brian Moynihan says U.S. consumer spending is up 10% compared with this time last year as the recovery continues. He spoke to Bloomberg's David Weston about the risk of inflation and his team's forecast for growth.
Our team has the U.S. growth predicted. Candace Browning-Platt, the #1 research platform for many of the last decade and years since I've been CEO. They do a terrific job. They have the U.S. growing at 6.5% for 21 and around 5.5 for 22. Now, you have to step back and think about that. That's an economy basically the same size it was coming into the middle to the end of 18, which was pretty good times in the U.S., predicted to go at 3 times the rate with an interest rate environment that is probably half or lower than it was then. There's all the angst about the 10-year moving to 160, but at that point it was 2.5 moving towards 3. Think about, and the Fed funds rate was much higher than it is now. So think about the amount of accommodation, and then you add the $1.9 trillion stimulus on top of it, plus the stimulus is still unspent. So when you put that all together, and then the stimulus, frankly, from people going back to work as the economy reopens, the team is at 6.5% in a huge economy. In the U.S., growing faster than the world economy is predicted. They got 5 for the world. If you think about that, that is a pretty powerful engine that has already recovered about 95 to 97% of where it was, and now is growing at 3 times the rate. That's a pretty powerful prediction, and our team is quite convinced it's all there.
Well, and that raises the question a lot of people are asking is it possible we may be overheating the economy? Because we also have been increasing the money supply. I think it's up something like 25% year over year, the M2. It's been held down, the inflation, because there hasn't been much velocity because people are at home. What happens when they come out of home? In fact, some of those depositors you talked about that didn't spend all their stimulus checks, they have it sitting there in their bank account. Are you worried we could get inflation that would be troubling?
Well, that's part of the discussion you see in the market. But let me just tell you what we're seeing in our customer base, David. It will help you think about that. If you think about last year up till March 9th or 10th, that was before any activities had taken to shut down. And we were all hearing about this virus and learning about it. It was really the March 15th and out where people started taking, at the government level and the employee level, significant actions. If you look at that period of time, 2020 over 19 grew, double digits, say 10%. When you look at it, 20 to 21, we're now growing at 6%. And if you look at it for the month of March, for the first part of March here, it's actually growing above 10%. That's pretty unbelievable. And what you're frankly seeing now is the credit card charges, which had been depressed because it's a lot of travel and entertainment, are back and actually growing year over year. Growing year over year at a time pre-pandemic shutdown. And so you're going to see massive year-over-year comparisons as you move into April when everything was shut down. So the reality is the consumers at Bank of America, which is 50 million people spending $3 trillion plus a year in all these different forms, are spending more money than they did last year and growing at 10%. And that was before the pandemic. That bodes well. And then if you look at the charges, you can see like on a credit card, the seniors and boomers are getting vaccinated. We're up 50% in charges over the last few weeks in terms of travel and related things. You're seeing the TSA statistics. So the types of things are happening. Now, by the way, grocery stores are down a little bit. Why? Because people shifted more to restaurants. And that's all bodes well for normalization of the economy.
The boomers are back on the move, and that bodes well for the credit card business. Bank of America CEO Brian Moynihan there with some really interesting insights into the US economic drivers right now. Now, NatWest is facing criminal charges in the UK, we've learned this morning, for failing to comply with money laundering rules. It concerns over £260 million deposited in a company's account. The Financial Conduct Authority says the bank failed to adequately monitor and scrutinise the large cash deposits. NatWest says it takes money laundering extremely seriously and is cooperating. Let's keep on the banking theme. Credit Suisse has recorded its best start to the year in more than a decade. Revenue at its investment bank was up more than 50% in the first 2 months of the year. Joining us for more on those stories is Michael Moore, our managing editor for finance. Michael, really good to have you on the program then with your contribution. So first to Credit Suisse, what does this mean for performance then and the outlook for the bank, the things they've told us this morning about IB?
Sure. So it's the first indication we've gotten of the first couple months for European banks. We're going to be hearing from more of the European banks over the next couple of days at a couple of conferences. So certainly we knew it was a strong start to the year, but this is perhaps even stronger than many anticipated in terms of the revenue environment. And with the amount of activity in the stock market, it seems like banks are benefiting from that and carrying over a very strong 2020 on the trading and investment banking front.
Okay, so they're telling a very positive story there, but we all know that the story we've been recently covering around Credit Suisse has been to do with Greensill, and they've certainly mentioned that this morning. How could the Greensill debacle disrupt that good start to the year that we've heard so much about from Credit Suisse?
Certainly, it's definitely an overhang for the firm. What they talked about this morning is on the loan that they made to Greensill, $140 million loan. They said $50 million of that has been repaid, but that could be a hit on the provision side. But I think the more concerning piece for Credit Suisse is what it means for their asset management business. They've got $10 billion of funds that are frozen and being wound down. And what the fallout from that is from a client perspective is, I think, where a lot of the concern is. The loan loss wouldn't be great, but I think there are bigger concerns about the asset management side.
Moving on to NatWest then, Michael, and we've just heard this morning about the money laundering charges. What do we know? What's the detail?
Sure. So this is an investigation that's been going on for a number of years. Started in the middle of 2017, and what's alleged is that a customer made increasingly large cash deposits and ended up depositing more than 250 million pounds in cash at the bank. And what the FCA is saying is that should have tripped some alarms on the money laundering front. This was, of course, over several years in the last decade. So NatWest says they've been cooperating over the course of several years with the investigation, but now we move from a probe to a criminal complaint.
Okay, interesting one to keep across then, Michael. Thank you very much. Michael Moore, managing editor for the finance team. A quick check on the share prices of those two businesses we were just talking about there. The NatWest Group share price down by 0.9%, and Credit Suisse to the upside up by 2%, just over 2%, in fact. Just a couple of other movers for you this hour then, 25 minutes into the European trading session. Zalando is moving higher, setting goals of cornering a tenth of Europe's fashion market. This according to our colleagues in Bloomberg News. We got a very punchy statement from that business after hours last night. That stock up by 5.3%. We also have some movement in Volkswagen. We heard comments this morning from our interview with the CEO of Volkswagen. That stock up by more than 4%. This after they announced this real big push into the world of batteries, trying to bring some economies of scale to the production of batteries. They'll do some of that with partners and some of it alone. Really interesting evolution of the EV story. Coming up on the program, vaccination efforts in Africa. We speak to the director of Africa's CDC. We'll discuss how the rollout is progressing, the infrastructure needed to vaccinate more than 1 billion people in more than 50 countries, and the global response to the pandemic. We'll be back with that important conversation next. This is Bloomberg.
will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 30 minutes into your European trading session, and European markets moving to the upside, up by 0.5% this hour. If we break things down into how things look from a sector perspective, then we've got energy to the downside. Not many sectors in negative territory, but energy is one of them, and we do see a bit of a weaker picture for oil prices this morning, down 0.9%. That is weighing on some of the energy majors here in Europe. 68.28 is the Brent price. To the upside, autos and auto parts move higher. VW is one of the big gainers within that sector. Let's turn our attention now to the vaccination efforts in Africa, and only a handful of countries have begun a rollout of vaccines. Fewer than 500,000 people have received shots in sub-Saharan Africa, a region of 1.1 billion people. Most governments have failed to secure supplies direct from pharma companies, and so the continent is heavily reliant on the COVAX scheme, but this only guarantees doses for 20% of a country's population by the end of 2021. But as supplies trickle in, nations are facing other challenges, such as poor health infrastructure, a shortage of trained personnel, and inadequate data on the people who need to be vaccinated. Joining us now to discuss, I'm very pleased to say, is Dr. John Nkengasong, who is from the Africa Centers for Disease Control and Prevention, where he is the director. Dr. Nkengasong, thank you very much for coming to talk to us. I wonder if we could start by getting a sense of the size of the COVID problem and outbreak in Africa. Some studies have suggested in the past couple of months that there is vast undercounting of COVID in some places outside of South Africa. How concerned are you about that?
Thank you, first of all, for having me on your program. The burden of COVID in Africa is huge. I mean, as we speak today, the continent has reported officially slightly over 4 million cases of individuals who have been infected with COVID. But we certainly know that that is an underestimate, because the serologic studies, which are studies that are conducted to determine if people have been exposed to the virus and have antibodies to the virus, do show that in settings like Nigeria, Zambia, that there might be a significantly more number of people that have been infected. But the key characteristics of our pandemic is that many people have recovered from it, and that the very young people are infected, but they really don't get sick. In our own setting at the Africa CDC, over 20 young people have been infected, and nobody has been hospitalized. So I think that is one unique feature of the pandemic in Africa.
What is the best way to vaccinate people in Africa, Dr. Nkengasong? Is it through COVAX? Is it through African countries doing their own bilateral deals with drug manufacturers? Or is it a mixture of both? What is the best path?
It is a mixture of both. The head of states have agreed on a common target that in order to get out of this pandemic, we should be able to vaccinate up to at least 60% of our population. And that will require that up to about 750 million people are vaccinated in the next 2 years in Africa. And that is the target we have set for ourselves. As you are aware, COVAX has agreed that they would supply the continent with 20% of our needs, vaccination doses, which we are very grateful. You don't get to 60% without going through 20%. However, the leadership of the continent, headed by Chairperson Moussa Faki, and also with the initiative of President Cyril Ramaphosa, when he was chair of the African Union, set up the AVAC, the African Vaccine Acquisition Task Team, which was designed to complement the efforts of COVAX and bring our doses closer to 70%, to at least 60%, I beg your pardon. So we are using all mechanisms at our disposition to try to reach a common target of at least 60% of immunization. I mean, you just read last week that China is trying to immunize up to about 80% of its population. Europe is trying to immunize as high as 70 to 80%, and as well as the United States. There's absolutely no way and no wisdom in Africa trying to vaccinate only 20% of its population.
So Africa needs to aim higher. What is the best argument that you can think of for the rest of the world when you see the amount of vaccination ordering that has been done in the West? What is the best argument for the West to not hoard that vaccine after it has vaccinated its own population and to vaccinate Africa more? What argument do you suggest?
This is a virus that is unprecedented. It's a virus that spreads extremely quickly. I mean, we are almost just past the 1-year mark of the first recognition of this virus. And no one could have, in December 2019, imagined that up to close to 120 million people will be infected in all countries in the whole world. No one could have imagined that 2.6 million people will die in 1 year from this virus. So I think there is wisdom in thinking that if we did not immunize the entire world almost simultaneously, then we will not get rid of this pandemic, despite the fact that individual efforts in developed world may immunize their populations to the appropriate level. So we have to look at this as a collective solution. That is, we either emerge collectively from this or we will stall collectively for so long. The easiest way to get out of this pandemic is to really immunize ourselves collectively.
And which variants are you most concerned about at this point? There's been a suggestion that if the virus is left to circulate within the African population, just as it would anywhere else, it would then lead to the opportunity for variants to develop. And we've already seen some of that. Which variants and where are you most concerned about?
The variants are very concerning, but our greatest effort should be in the prevention. In any case, we are applying public health measures and then making sure that vaccines are distributed quickly. So if we allow the virus to replicate, then there will be more variants. Those are the hallmarks of a virus that replicates as quickly as the COVID virus. So it is in an interest to vaccinate very quickly so that we stop the circulation of the virus. Then the issues of variants will be gone. Otherwise, we continue to have new variants. Today, we know the variants that have been identified in UK, in Brazil, in South Africa. But tomorrow, there will be many other variants if we allow the virus to keep circulating. And that is why there's plenty of wisdom in trying to vaccinate everybody almost aggressively simultaneously than vaccinating certain parts of the world and some parts of the world are extremely left behind.
I think that the AstraZeneca is the cheapest vaccine that Africa can get its hands on. You correct me if that is a wrong assumption. But thinking about the AstraZeneca vaccine, I'm sure you've been following the difficulties it's been facing in Europe. Some European countries putting a temporary stop on vaccination whilst they wait for an update from the European Medicines Agency, even though the latest guidance from the EMA is that it is safe and the latest guidance from the WHO is that it is safe to use. What are your thoughts on the AstraZeneca vaccine?
The AstraZeneca vaccine was determined to be safe and efficacious, and we would need to review the data. I think I've maintained all along at the start of this pandemic that we should guide the response with evidence, and we should guide the response with strong science. So that science needs to be reviewed. Those evidence need to be reviewed. And we, as the Africa CDC, will be convening a meeting, an emergency meeting this afternoon with all the experts across the continent to look at the data, what we know, and then to provide appropriate guidance to the continent. So I think we should not, and I really, I use this word very deliberately, should not be driving the response to this pandemic by fear. It should truly be the ability to use science, appropriate evidence to drive the decisions.
But should use of the AstraZeneca vaccine continue?
So that's what I'm saying, that I think the evidence will be reviewed this afternoon by the Africa CDC, and we'll be able to make a determination based on this data, science, and that we know has been made available. Then we'll make a determination. So I'll wait until I hear what that expert committee of the Africa CDC will say today, then we'll make a determination. But already the World Health Organization is saying we don't have enough evidence to associate the outcomes we are hearing to the vaccine. The European Medicine Agency is saying similarly. So I'll wait to hear what our experts from the Africa CDC will say before we advise member states.
Okay, and then you'll advise member states. Just in conclusion then, John, I wonder if you could give us your thoughts of how far through the pandemic Africa is. Of course, it will depend very much on the vaccine rollout, but would you say that the worst is behind Africa? How would you put in context where we are right now?
No, I'll put in the context of what we are dealing with that. I would say that we are not out of the wood yet. The vaccines offer a promise for the beginning of the end of this pandemic. But that will only happen if we do two things. If we vaccinate at scale and do that quickly. So if we do what we have stated, that is vaccinate at least 60% of our population in the next 2 years, then this pandemic will be over. But if we vaccinate slowly, it will take us more than 5 years to put this pandemic behind us. And who knows? And if we do that, actually, we may be living with the real prospects of moving towards an endemic situation on the continent with COVID-19. And nobody wants to see a headline that says COVID in Africa moving from a pandemic to an endemic disease. I think that would be a terrible headline to report 2 years from now.
John, really interesting conversation. Thank you so much for joining us today. Dr. John Nkengasong, Africa Centers for Disease Control and Prevention Director. Coming up on the program, we continue to focus on the rollout of vaccines. We focus on pharma and speak to an analyst about his best picks within the sector. We'll get his thoughts on the rollout of vaccinations as well. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Welcome back to the European market open. 43 minutes into a trading session that is broadly positive. Stocks Europe 600 up by 0.4%. The auto sector doing well today, based around some of the news flow from VW. Now, Europe's biggest countries, including Germany and France, are suspending use of AstraZeneca's COVID-19 vaccine. That is despite assurances from the EU's medicines regulator that the shot is safe. This latest health scare is creating yet another delay for Europe's vaccination program. Joining us now is Eric Le Berrigo, head of healthcare research at Bryan Garnier & Co. Eric, good to speak to you, and we'll come to the stocks in the healthcare sector more broadly in just a moment. But starting with the latest news flow surrounding AstraZeneca, how surprised are you to see the actions of the individual health regulators in individual European nations taking these steps, or are you not surprised at all?
Yeah, well, it's a bit of a surprise, but we can understand that they're taking a precautionary principle to decide. It's probably a delay by a few days. As you stated, there will be this extraordinary meeting from the EMA no later than Thursday. So they can take the risk of delaying the vaccine by a couple of days to get 100% insurance that the vaccine is safe. So yes, because everything is now stated at the Europe level, it could be a bit surprising to see this kind of decision on a country basis, but I think should be back to normal by Thursday.
It's interesting. I mean, mostly, I'm sure, this kind of thing happens in a way that doesn't capture the public's attention. When any kind of drug is questioned for any reason, suspended temporarily, I'm sure it doesn't usually make international headlines. And yet, of course, because we're living in pandemic times, that is exactly what it does, Eric. Are we talking about the usual bars for safety being applied here? Is this just the usual process, or is this this high level of caution and these precautionary measures, is it out of step with the norm?
There's probably a couple of differences. First is that we're here in the case of a vaccine, and so as you know, we are vaccinating people that are not supposed to be healed. So we are vaccinating healthy people to prevent from a disease. So obviously we need to have more higher bar than any other drugs. And the second specific in this case is that those vaccines have been approved under emergency use authorizations. So we know that it has been quicker than any time before. And so here again, we need to be more careful than usual.
And is there plenty of data sharing going on? Would you expect there to be plenty of data sharing going on? Because some of the rollouts in some of these individual European countries, they haven't vaccinated all that many people, and there are much bigger data sets available elsewhere in other countries. Would it be normal practice for that kind of data to be shared?
Well, it's up to the manufacturer also to do what we call the pharmacovigilance. So they're putting all together all the data from all countries. So everything that is not at reach from one single country will be under the umbrella of the company itself. And so the 17 million people vaccinated so far with their vaccine, all that will be available for the EMA to make its final decision by Thursday.
And you have covered European health stocks, a number of them, and AstraZeneca is one of those. We've heard that AstraZeneca, of course, is involved in the COVID vaccination process in the initial stages, at least. Doesn't plan to make money from it. But I know that you look very favourably on the stock at this point. Eric, what is it that drives your valuation on this business at the moment?
Well, clearly our decision, and this is not Astra specific, but is not to include anything out of COVID, except for those who are making vaccines that are already in the market, like the Moderna and the BioNTech. So for those, obviously, this is part of their business. But for anything else, we decided not to do, and even more specifically with AstraZeneca, since they did clearly that they won't make any money with it, there was no reason to impact our valuation model. So it's free from any COVID impact. Now it created some speculation, clearly. Maybe at some point the share price benefited a little bit, but clearly since December, I would say it has been more a drag than anything else. So they're paying the price to try help, and well, it is impacting their image for sure.
Impacting their image. Do you ultimately suspect that these temporary suspensions, Eric, will be lifted by various European countries and certain Asian countries and Central American countries? Do you think that those temporary bans on the AstraZeneca vaccine will be lifted, or is it simply too early to say?
It's early, but if we look at the data that were made available in the press release on Sunday, out of 17 million vaccinees, there's been 15 cases of DVT and 22 cases of pulmonary embolism. If that proves to be true, the rates are very low. The issue here is that we have no comparison arm, so we don't know what happens with unvaccinated people. If we could have this, and similarly maybe some cases with other vaccines and at a similar time frame, maybe we could be reassured. This is probably the kind of things EMA will try to make clear, is whether the incidence rate is quite normal. Of course, if it has anything to do with the vaccine, and if other vaccines in the same conditions are pretty much reporting the same rates. So
okay,
I would suspect that if the numbers are those ones, very likely to be lifted by Thursday. Yeah.
Okay, thanks very much, Eric. Thanks for joining us. Eric Leberigo, Brian Garnier and Co, Head of Healthcare Research. Really interesting to get your perspective. We didn't go beyond Astra, but it's such an interesting conversation. I thought we'd stick there. Coming up on the programme, following the dots, Bloomberg Economics says a few might drift higher, but the committee will hold the line. I'm talking, of course, about the Fed's dot plot. We look ahead to the Fed conversation this week. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open, 53 minutes into Tuesday's trading session, and we have European equity markets moving up by around 3 or 0.4%. It is Fed week, of course, and that is where a lot of our attention lies. Let's get into a conversation about these markets with Laura Cooper, Bloomberg Markets Live macro strategist. Good to speak to you then, Laura. It is Fed week. It means that we are seeing what maybe some calm before the storm. Is that calm of comfort or concern?
I'm not quite sure whether it's really comfort or concern, because markets don't really know what to expect from the Fed on Wednesday. It's really going to be that key market risk for the week. Now, markets will be watching for those dot plots. And yes, economists don't expect to have the Fed actually move that 2023 hike. I would expect that more members are likely going to signal that they do feel more comfortable with tightening bets for 2023. And that will really give the green light for markets to ramp up those tightening bets. And as well, markets will be looking for that SLR exemption expiry at the end of the month. Will that potentially be extended? And that is quite important, notably for the Treasury market, as it is adding about an estimated $600 billion on bank balance sheets. So really crucial turning point tomorrow potentially for Treasuries. So yes, I do think we are kind of in this holding pattern awaiting that key event risk tomorrow.
Key event risk there with regards to the Fed, some event risk with regards to the Bank of England as well then perhaps, Laura. And I know that you've been writing about the rising break-even rates that we've seen in the UK, higher inflation expectations coming into the market. Going back to, we haven't seen these rates since 2008. What does that tell you?
Well, it tells me that markets are betting on this bout of inflationary pressures. If anything, they're signaling that we are seeing a potential regime shift to this period of secular inflation. Now, Governor Bailey did come out yesterday and say that they are embracing the rise in nominal yields that we've seen, as that reflects this change in the economic outlook. But there is a risk that markets are getting too far ahead of themselves in actually pricing in inflation. So the Bank of England still sees it as transitory, and they are watching. They're going to need even more evidence than usual for them to actually tighten policy this time around. So it's really this battle between the markets and central banks continues on both sides of the Atlantic.
Thanks very much, Laura. Really good to speak to you. Laura Cooper, Bloomberg Markets Live macro strategist. That is it for the European equity market open. We have European equity markets moving broadly to the upside. We're up by 0.4% on the stock 600 right now. In terms of the sector breakdown, autos and auto parts seems to be doing well. Volkswagen, Porsche, Faurecia in the parts making space, all doing pretty well today. It's the energy names that are dragging, and we have a considerably weaker price for oil itself, oil by the barrel, so perhaps that is not so much of a surprise. That is it, as I say, for the European Market Open. Surveillance Early Edition is up next. They'll continue to take you through all the market action, flat to mixed currently on US futures. This is Bloomberg.
have to stay on top of every dollar spent through the American Rescue Plan. And that's what we're going to do.
The stock market has continued to do quite well over the course, especially the latter half of the year. So that gives us a lot of room to think about where revenue can come from.
The consumers of Bank of America, which is 50 million people spending $3 trillion plus a year in all these different forms, are spending more money than they did last year and growing at 10%.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning from London, Berlin, and New York on this Tuesday, March 16th. Our top stories today. Targeting top earners, Joe Biden's tax plan will hit those making over $400,000 a year the hardest. The newest COVID crisis, Europe's biggest economies have stopped using the AstraZeneca vaccine because of a health scare. And Ray Dalio warns that betting on bonds is stupid. The hedge fund billionaire says it's time to buy stuff, any stuff that will equal inflation. Oh, there's quite a lot going on in the market. Some pretty punchy words from Ray Dalio. We look at Volkswagen with also that great interview from our Matt Miller. And overall, Kaylee, there's quite a lot going on also in oil. Now, that's linked to various dynamics, including the price of dollar. What are you seeing?
Well, of course, we're coming off fresh record highs in the U.S. yesterday, Francine, and risk appetite is continuing in this Tuesday session. It really started in Asia, where the CSI 300 closed about 0.9% higher, even though there are existing concerns about a big tech regulatory crackdown. We're seeing gains in Europe as well amid the drama, as you just mentioned, over AstraZeneca's vaccine, countries suspending it all across the continent. The stock, though, resilient, up 2.7% in today's session. Of course, there's also drama between the EU and the UK, legal proceedings around a break in the Brexit deal. That has the pound weaker against the dollar, the cable rate sitting at 138.18 at this point. Here in the US, futures pointing to a stronger open, with the NASDAQ 100 looking to outperform again. Futures up about 0.25% as yields really stabilize, hovering right around that 1.6% level ahead of the Fed decision tomorrow. We are seeing weakness in oil, contango in the prompt time spread, maybe spooking the market as well as a stronger dollar. The Bloomberg Dollar Spot Index up about 0.2% right now. As for what is moving in the pre-market, I mentioned big tech outperformance, momentum as well. You can see that in Churchill Capital, the SPAC, which is higher by about 4.5% in pre-market trading, while Apple is up about 0.6%. And two COVID-related movers, a test maker, Adaptive Bio, is up about 13.7% in the pre-market, while CureVac, is up by 4.4% at this point, Matt.
CureVac out of Tübingen, Germany, where I spent a few ill-fated university years. I want to take a look at the vaccine race here in Europe. Of course, the U.S. is doing far better than any continental European country, but the UK is killing it when it comes to giving out doses compared to Germany here in blue, France in yellow, Italy in, I guess it's lavender there, and Spain in pink. You can see the UK really beating everybody. In the new AstraZeneca news, or the new headlines that we seem to get every day, Francine, mean, I think, that the UK is going to even widen this gap further.
Yeah, it's amazing. I was looking at some of the numbers, Matt. So I think we're at 40% of people vaccinated in the UK. In Europe, it stands around 10% and 30% for the US. But what's very clear is that markets today, despite the challenges, we're also expecting the EMEA to actually decide on the AstraZeneca vaccine on Thursday. Despite the challenges, are forward-looking, and so are basically deciding that this could delay the recovery but not derail it.
Right. Well, I mean, even if the EMEA approves it, it's still going to be difficult to convince the population that after every major economy in Europe has shut it down, don't worry, it's safe to take, and they'll run out to grab it. Let's take a look at what's ahead today. In about 1 hour, we're expecting the Germany Euro area March ZEW survey. Later on, we're going to get a U.S. February retail sales read, and then EU health ministers will be meeting, so no doubt more AstraZeneca headlines. Francine, it's going to be interesting to see how this story develops, but it seems like at least many nails have been put into the coffin of this vaccine for the European population.
Yeah, I don't know how they scale it back, especially as here in the UK, actually, no one seems to be that concerned about it. Now, Europe's vaccination program has sunk further into disarray, as Matt was saying, with more countries suspending use of the AstraZeneca shot. Germany, France, Italy, Spain have become the latest nations to pause use of the vaccine pending a further assessment by the European Medicines Agency on Thursday. Now, the suspensions come despite a statement by the EMA last week that the number of blood clots in vaccinated people was no higher than the number seen in the general population. Now, let's get more on the science behind this with our Sam Fazeli, our senior pharmaceutical analyst and also head of EMEA research for Bloomberg Intelligence. Sam, in the UK, there are no real concerns about the vaccine, not so in the rest of Europe. What exactly is going on? Are there real concerns, or is it just that the population is afraid and so governments need to step in?
Yeah, so Francine, good morning. What we've got here is that obviously in the UK we've had the highest number of doses that have been delivered for the AstraZeneca vaccine. I would estimate we're around the 11 million doses. And remember that the UK regulator actually publishes on their website a weekly report talking about the side effect data that they're seeing. So they're looking at it on a weekly basis, and they haven't come to the conclusion they need to stop. Some European countries started that. I'm just hashing the history here. Finally, we're getting to the point that we should have got to earlier. The EMA sitting together, the European Medicines Agency, and looking at the data. It's just a big pity, Francine, that it's not a public meeting.
It's interesting, Francine asks if the population is scared and so governments step in. Sam, the way I see it, the governments step in and that makes the population scared. What kind of damage does this do, you know, compared to the possibility of allowing a couple of dozen blood clots continentally and getting people vaccinated?
Yeah, so we have to be careful here in that, you know, anybody getting a side effect and suffering is not great. Obviously, it's not good. But you have to go by the data. You cannot go by the anecdotes. And the only people who have the data are either the health authorities themselves with the groups of data points that they have, but better would be the MHRA and the EMA that sees all the data from all the countries, much more millions of doses having been administered. But at the end of the day, we will hear the analysis that will come out of it. And you're absolutely right. Before this, even at the end of February, about 40% of the population in Europe surveyed by YouGov that were saying that they don't think the AstraZeneca vaccine is safe, whereas that number for Pfizer and Moderna was like 10%, 20%. How do they know? It's because of the rhetoric or the conversation.
But Sam, do the numbers even matter anymore? AstraZeneca has had such bad press in the last 2 months in Europe. Does Europe just need to move on without that vaccine?
Yeah, so I'm just going to set off and do a little analysis of what's going on with the numbers of doses and what Astra has said, what Europe has said. At the end of the day, if you had one of your key vaccines, and I can't tell you just off the top of my head what percentage of the vaccines that EU was supposed to be using are actually those numbers are in the system, that if you subtract that out, you're going to have a longer time. I just can't put my finger on how long.
Sam, thank you. Sam Fazeli, there, senior pharmaceutical analyst and head of EMEA research for Bloomberg Intelligence, joining us this morning. Now, coming up next, we speak with John Normand, JP Morgan head of cross-asset fundamental strategy. We'll, of course, talk about vaccine delays and what that means for the recovery in Europe. And then a little bit later this hour, Stephen King, HSBC senior economic advisor. We'll also be talking about oil. We'll be talking about treasury yields. And, of course, we'll be talking about German bonds. That's at 5:30 a.m. in New York, 9:30 a.m. in London. And this is Bloomberg.
80% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Seniors and boomers are getting vaccinated. We're up 50% in charges over the last few weeks in terms of travel and related things. You're seeing the TSA statistics. So the types of things are happening. Now, by the way, grocery stores are down a little bit. Why? Because people shifted more to restaurants. And that's all bodes well for normalization of the economy. So we see that very good. Does that overheat the economy? I think you've heard it from Chair Powell in many cases. They're willing to take the risk to get the average inflation rate above 2%. There are people concerned in the market. We all have that concern because inflation's tough to fight if it gets embedded in there. But there's a lot of temporary factors, and we'll see what happens. And I think you'll hear the Fed's most recent economic projections over the next few days, and we'll see what they say. But our economists have raised their projections from 4% to 6% in really 90 days, and I think likewise other people will do so.
Well, that was the Bank of America Chief Executive Brian Moynihan speaking with Bloomberg's David Weston. Now, joining us this morning to talk about the markets is John Norman, head of cross-asset fundamental strategy at JP Morgan. John, thank you for joining us. We're moving away, at least for today, from talking about reflation to some of the concerns about vaccine rollout and some of the potential domino effect that could have. Does that change in any way what you're constructive on, or do you still just focus on reflation and actually the fact that we will see a recovery?
I think the focus still has to be on reflation. Even in a place like Europe, which is clearly lagging in terms of vaccine progress, there is some incremental gain every week in terms of the share of the population that is receiving shots, and the economy is still delivering better growth or better performance than most people would have expected a few months ago when the lockdown started. So I think the path is fairly clear, meaning it's up, and I do think that when Europe manages to catch up to the UK and US in terms of vaccinations, even if that's 3 or 6 months from now, there is going to be a boom in Europe in terms of growth, which is going to rival what you might see in the US. The sources will be different. It's going to be from easing of restrictions on activity in Europe as opposed to the US, which is much more about the fiscal impulse. But the end result in terms of growth could be comparable in the two parts of the world.
When you look at cross assets, what could the shock come from? And we talk about reflation day in, day out. We also talk about how that changes the 60-40 portfolio construction. But is there anything that you think could surprise us and actually, change everything that the market has not thought of?
Well, I think it actually would just be an extension of the current preoccupation that the market has. The current preoccupation the market has is that inflation is going to move up. It's going to stay higher for longer than the Fed expects, and therefore not only is the Fed going to have to taper reasonably soon, but the Fed is going to have to tighten sometime in 2023. And we're fading that view in the sense that we think that inflation is going up, but then it's going to move lower in the second half of the year. There'll be no need for the Fed to tighten as early as 2023. But I think if there's going to be a surprise, it's going to be that the move up in core is longer lasting, it's more durable. It continues through all of 2021. And if that happens, not only is the money market pricing going to look fairly reasonable, but it's going to have to shift up even further over the next several months. So I'm really most concerned that this sort of temporary move up in inflation is not going to be temporary. That's going to be much more persistent and get the market much more worried on the bond side, with the usual kind of casualties to the EM markets and to stock markets occasionally.
I mean, it seems as if you agree to some extent with Ray Dalio. He didn't ask me anything yesterday on Reddit. He says the economics of investing in bonds and most financial assets has become stupid. Rather than get paid less than inflation, why not instead buy stuff, any stuff, that will equal inflation or better? Do you agree? And what kind of stuff, then, do you think is the best to buy?
Well, I wouldn't buy just anything. I think the value of something at current levels is important, and I think it's also worth recognizing that various markets have different degrees of interest rate sensitivity. So I'd be very comfortable buying stocks, even though they're highly valued, simply because there is a big offset in terms of earnings growth. I'm not comfortable at all buying credit, even though I'm very positive on where earnings momentum is going to go and how the default cycle is going to ease off and how an upgrade cycle is going to continue. The reason is simply that credit has too much duration risk in it, maybe even the high yield market as well. So I would have most of the emphasis in equities and also in commodities, because if we are going to be surprised by something over the next several months, it's going to be inflation, and essentially buying commodities is like buying inflation. You're essentially taking exposure to something which is going to benefit from scarcity over the coming quarters.
You know, if you're looking at stocks, it seems like Dalio says to avoid dollar-denominated stocks. I looked at global markets since the bottom of the pandemic, and European stocks still have a long way to go to catch up. The NASDAQ is doing great. The S&P has done very well, not quite as well. But the stock 600, I've got a chart here. You can see it in purple, and the Shenzhen 300 far underperforming. Do you like those over U.S. stocks?
I wouldn't own EM equities or EM anything right now versus the U.S. simply because I think there's just too much risk that rates are going to go up in terms of 10-year yields over the next few months, and that's going to cause the dollar to strengthen and EM to underperform. I do think, though, that rates are going to see a peak at some point going into the summer because there's already some pretty aggressive pricing at the front end. And as rates start to move sideways, EM, I think, is going to have lift. So there'll be a time to rotate into EM, not now. I think what's more interesting in terms of the rotation trade is actually how well Europe has kept up with the U.S., even though the European economy is definitely struggling relative to the U.S. economy. It really speaks to the better valuations in Europe, the much reduced sort of concentration risk in Europe because of the sectoral composition. And I think it kind of foreshadows how much Europe can outperform in the second half of the year when the economy finally does reopen. So, you know, there are different times to play different parts of the rotation trade. For me, right now, it's probably much more in Japan, to a lesser extent Europe, and EM. In the second half of the year, it's probably going to be much more about EM.
Well, John, I want to pick up on Europe because within the European equity market, the travel and leisure index for the stock 600 is at an all-time high. Does that not seem that it maybe has front-run the recovery a bit too much, considering you have Italy moving back into lockdown and the vaccine rollout on the continent is quite slow? Have some of those trades run too far, too fast?
Well, I think always when you have some sort of big macro catalyst, whether it's stimulus or it's a policy-related event like vaccination, the market is always going to run well ahead of what the underlying economy is doing. I think what people need to focus on, though, is the fact that even if the market has reclaimed its previous high or its pre-pandemic high, there's still a lot there's still a lot further the expansion is going to run over the next several years. So it's not ridiculous to think about markets pricing in where earnings could be in 2 or 3 years' time, even if they've already priced in the next 12 months. So the focus very much is going to move from what does the next 12 months look to what is the rest of the cycle going to look like. And that's why I think it's just far too soon to be fading things that might look expensive just because they're trading at levels that existed before the pandemic.
John, thanks so much. John Norman, there, head of cross-asset fundamental strategy at JP Morgan. Now, coming up, Bloomberg's 4th annual Equality Summit. We'll be hearing from guests including Anna Botin, Santander Executive Chairman and President of the European Banking Federation, and Irene Tinagli, the Chair of the Economic and Monetary Affairs Committee for a European Parliament. That all kicks off at 2 p.m. in London, 10 a.m. in New York, and this is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London and Kaylee Lines in New York. Let's give you your first word news off the Bloomberg terminal. In China, a sign that the government's crackdown on the internet sector is only just beginning. President Xi Jinping warned that Beijing will go ahead and go after so-called platform companies that have amassed data and market power. Regulators are now said to have set their sights on Tencent Holdings after ordering an overhaul of Jack Ma's Ant Group. Credit Suisse recorded its best start to the year in a decade in terms of trading, but that was before the implosion of Greensill Capital this month. Credit Suisse says revenue at the securities unit rose more than 50% in the first 2 months of the year. The bank warned now it may have to take a charge on a loan it extended to Greensill before the firm filed for insolvency. And Volkswagen plans to become the global electric vehicle market leader by 2025 at the latest. The German automaker said today it's targeting 1 million electric vehicle sales this year. That's double what Tesla does. VW plans to widen cost savings efforts and standardize key technologies. The CEO, Herbert Diess, was asked about reports there may eventually be a separate listing of VW's Porsche sports car unit by someone you may know.
We have synergies, platform synergies with Audi, with the Volkswagen Group. We are producing some of the Porsches in our Volkswagen manufacturing network. That also adds to the value of Porsche. So a standalone for Porsche is probably not what you finally want.
It was me, Fran. I was the one who asked him, as you pointed out earlier. I think the most exciting things here are they're going to spend $30 billion on a new software unit, hire 10,000 additional people to write code, and another $30 billion on battery plant investments. So it's a huge push.
Yeah, and Matt, I mean, a great interview. I really enjoyed it. And it's very clear that Volkswagen want to position themselves as kind of the market leader in terms of these batteries that will be used. And so they're trying to, I think, rearrange their existing way of doing business so that they can actually put some funds to good use and to innovate. But at the end of the day, if you're going to buy a car, a Tesla or a Volkswagen, I don't know whether, you know, your heart goes to someone that has been at the forefront of the electric movement right from the beginning.
Yeah, that's actually a very fair point, Francine. Matt, what's your take on that?
They haven't updated those vehicles, though, right? I mean, the Model S is getting a little bit long in the tooth, so they've got to continue to innovate. Maybe the Cybertruck does that, but Volkswagen has incredible firepower and experience behind them.
Yeah, and I wonder whether, I know you have all the numbers in your head, Matt, so I'll quiz you to see how much they could actually sell to the US and to Asia, but certainly quite exciting plans for Volkswagen. Now, coming up next, we're talking about, I guess, the end of big oil as well with Stephen King, HSBC's senior economic advisor. But before that, we need to talk about yields, we need to talk about gilts, and we need to talk about tax increases in the US with the new Biden proposal. This is Bloomberg.
Not only just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
to a place like this and be able to break some stuff and release some tension without going to jail.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The Fed decides. As investors challenge the Fed's view on inflation, how will policymakers react? Coverage begins at 2 p.m. Wall Street time on Bloomberg Television.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, there's quite a lot going on in the markets, Kaylee, and it seems that we're no longer, at least for today, maybe for a couple of hours, not talking about reflation, but we're talking about some of the vaccine challenges out there and whether the markets will continue to look through them.
Yeah, well, at least AstraZeneca shareholders are looking through the challenges in Europe today, Francine. That stock resilient. It is higher in European trading. Here in the U.S., with about 4 hours to go until the opening bell, we are seeing a mixed picture when it comes to futures. Both the S&P and Dow closed at all-time highs yesterday, but they are both fractionally lower in the pre-market, while big tech looks to outperform for a second day. NASDAQ 100 futures up nearly 50 points at this point, helped out by steadying in the Treasury market. We go nowhere on the U.S. 10-year yield, sitting right around 1.6%. Really, that market laser focused on whatever is going to come out of the Federal Reserve tomorrow. And Bitcoin, after rallying to a record high above 61,000 over the weekend, it continues to retreat. We're just below $56,000 right now. That decline in Bitcoin is weighing down some stocks tied to the cryptocurrency. Marathon Patent and Riot Blockchain, each lower around 2% in pre-market trading, but just as volatile as Bitcoin perhaps have been some of those Reddit trader favorites, the likes of GameStop, which fell 17% in yesterday's session. It's now rebounding by 3% in pre-market trading, while AMC, another favorite, is higher by about 4.5%. Could be a little bit of stimmy money coming in to buy the dip, Matt.
Got to get those stimmies out. Tomorrow, the checks, I believe, go out tomorrow. And maybe they'll affect this chart here. This is a look at break-evens, and far be it for me to argue against our editor-in-chief emeritus, but the market is really concerned about inflation. You can see the 5 years going up to 2.74% right now. This is also something it seems Ray Dalio was worried about, Francine, in his Reddit AMA yesterday. It seems like inflation, together with tax increases that he says could be shocking, are a real concern for some of the biggest investors in these markets.
Yeah, so many questions for Stephen King, Senior Economic Advisor at HSBC, who joins us now. Stephen King, we also, of course, have news of the Biden administration looking at these tax proposals. That's the next item on their agenda, looking for higher taxes for anyone above who earns above $400,000 a year. Does that actually keep a check on inflation at the margins?
Well, it keeps a check to a certain degree on the size of the budget deficit and the additions to government debt. And to that extent, it means there's no longer a kind of permanently open checkbook whereby you can spend without actually raising taxes. And frankly, the history of periods when you have these big increases in government debt, mostly during wartime, and most recently, of course, during the pandemic, is that once the sort of crisis is out of the way, someone somewhere has to pay for it. And often you find it's taxes that go up. We've already had that kind of announcement from the UK over the last couple of weeks, the prospect of higher corporation taxes coming through in a couple of years' time. I think the US is providing a similar kind of signal to suggest, yes, we have to pay for this one way or another, and higher taxes are probably the most obvious way of doing it.
What's your take on inflation? Are we going to see runaway inflation? And if we do see, maybe not runaway inflation, but some kind of inflation that, surprises economists to the upside, do we see it in the next 2 to 3 months, or could it take longer?
I think most economists, frankly, do expect inflation to pick up over the next few months, partly because of the increase in commodity prices that we've already seen. That's kind of baked in the cake. What I think is more relevant is what happens later this year into 2022 and beyond. Is there likely to be a sort of sudden permanent shift upwards in inflationary expectations that goes far beyond what central bankers themselves have so far achieved? Now, one reason why you might think this is going to happen is because of the average inflation targeting regime of the Federal Reserve, basically more relaxed about the idea of inflationary overshoots in the future than might have been the case in the past. A second reason, of course, is simply the scale of the fiscal stimulus in the US in particular coming through during the course of this year. But I think the key thing here is really that the market's wrestling with massive uncertainty. We've had lots of inflationary warnings over the last 10, 20 years. Very few of them have really come to anything that's been significant. But this time around, we have uncertainty associated not just with the size of the policy stimulus, but also with a possible economic scarring coming through from the pandemic. Put those two things together, you have uncertainties both in terms of the scale of demand pickup and also uncertainty over the availability of supply. So the chances of policymakers getting it wrong, unintentionally perhaps, are higher now than they might have been in the last 20 years or so.
Actually, speaking of uncertainty, first off, I wanted to show, to visualize the funding gap here. This is U.S. receipts, tax receipts as a percentage of GDP. The chart goes back to before me. But in the middle is the 1990s when we hit a high under the Clinton administration, and then the trend is down, down, down. Probably a difficult ship to turn around. But I wonder, when you talk about uncertainties, Stephen, what do you think about the possibilities of unintended consequences from, you know, $7.3 trillion of emergency spending from the Federal Reserve since the beginning of the pandemic, added to $6 trillion of stimulus from the federal government? Doesn't that kind of, you know, 65% of GDP in stimulus spending also give the possibility of unintended consequences?
Well, first of all, it's important to recognize that the governments have done probably the right thing under the circumstances. Here we were faced with these huge lockdowns associated with trying to control the pandemic. And the risk in lockdowns is that you have countless companies going bust. You want to avoid that. You want them to be in a position to actually employ people and make products and make profits, frankly, in the recovery phase that eventually comes through. And here we are with the recovery phase now beginning to come through. The hope is that all this extra government borrowing has sustained companies that would otherwise have disappeared. And that in itself must be a good thing. You're better off doing that than doing nothing. On the other hand, it is also true that budget deficits are significantly bigger than people might have originally anticipated. We know from the beginning of this year that's led to increases in the 10-year bond yield, which of course is the discount rate you apply to valuations of stocks. And at the same time, the stock market has been incredibly strong over the last 12 months, partly thanks to monetary stimulus. So one danger here is that you have the sort of law of unintended consequences, namely that you have rises in bond yields, which begin to have negative effects on riskier assets elsewhere.
Do you expect the Fed to do something about that tomorrow?
Well, I think they've got to think about what's happened with bond yields quite carefully. Whether they do something tomorrow or not, I don't know. But what I think is important to stress is that they're trying to give the impression that there's no hurry to raise interest rates. There comes a point, perhaps, where they become worried about what the market is signaling relative to their own plans. And if that gap gets bigger and bigger, then eventually, as a policymaker, you probably have to do something to step in.
Well, you say the Fed is in no rush, or it has expressed it as in no rush to raise interest rates. But at what point is that really easy policy more difficult to justify, given the growth outlook is improving and the Fed is expected to raise its own growth forecast tomorrow?
Well, part of this depends on your guesses about spare capacity within the economy and also the level of unemployment. To be fair, the Federal Reserve to date has really emphasized the issue that unemployment is still too high. It has to come down further over the next year or two. And they're also hoping, I think, that they can manage that without inflation picking up too far over the next couple of years. Where it goes wrong, potentially, is twofold. First of all, the bond yields themselves rise much further than anyone is currently expecting. And secondly, and this is the bigger risk, I suppose, in one sense, is that inflationary pressures pick up faster than people are currently expecting. I mentioned before, this is a world of tremendous uncertainties. There's lots of things that might go right, but equally lots of things that might go wrong, and this is one of them.
Why would, Stephen, inflation actually rise more than expected? Because people go, wild post-lockdown, or because we're importing inflation from China?
I'm going to go wild.
Emerging markets.
Well, there may be people going wild, of course. The main reason really is that you have a combination of two things happening at the same time. You have tremendous fiscal stimulus, and at the same time you have households able to spend for the first time thanks to the end of lockdown. So there are two separate stimulus effects beginning to come through. The first is a sort of public sector-driven story, and the other is a private sector-driven story. Put the two together, we just don't know what the magnitude of it's going to be. Now, our central case is that inflation will not pick up in any significant way. It'll be very much under control. But if I'm a policymaker, I'm very much aware that my central forecast isn't necessarily going to be the actual outcome over the next few quarters.
All right, Stephen, thank you so much. Party at Miller's house, Matt Miller's house, December 31st, when everyone's vaccinated. Stephen King, their senior economic advisor at HSBC. Now, coming up, hitting high earnings, we'll discuss the latest tax plan proposal from President Joe Biden. It's targeted to hit those earning more than $400,000 a year. That's coming up next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, President Biden is said to be planning the first major federal tax hike since 1993. Now, the proposals to pay for some of his longstanding economic and infrastructure plans will mostly affect those earning more than $400,000 a year. The White House economic advisor, Heather Bushey, tells us that she sees a long list of urgent and important needs for the next economic package.
Those at the top of the income distribution, have seen their incomes not be subject to the same kind of shocks, and the stock market has continued to do quite well over the course, especially the latter half of the year. So that gives us a lot of room to think about where revenue can come from, and that folks at the top who've been able to benefit from this economy and haven't been as hard hit. There's a lot of room there to think about what kinds of revenue we can raise.
Let's get straight to our politics and tax expert, Marty Schenker, Bloomberg News editor-at-large, who joins us now. Marty, first of all, this is the initial proposal. How many times will this proposal change before it could actually get passed?
Well, dozens or hundreds of times. Tax legislation is one of the most difficult things to get through Congress, even when you do control both the Senate and the House. So this proposal or this framework for a tax increase is going to go through myriads of changes.
Republicans don't like tax increases, Marty, but they also don't like a huge deficit. So how many of them could actually get behind a proposal like this?
Well, Joe Manchin said he's not going to go support any infrastructure plan that doesn't have bipartisan support. And a big part of that is going to be how do you pay for it? So I would suspect that there will be some offsets that you might be able to get some GOP senators to go along with. In the House, it's a much more difficult proposition.
Marty, Ray Dalio says that the tax increases could be shocking. And then, more interestingly, I thought on the Reddit AMA yesterday, he said there could be prohibitions against capital movements. Is he overly concerned?
Well, at Ray Dalio's level of income, I don't think he is, Matt. Until this becomes more real and not theoretical, I mean, you can debate what the impact of any tax increase is going to be, but certainly those in the highest income brackets, the big investors, the people with wealth, should be concerned about how this movement is going, not just because of federal tax increases, but state and local ones.
So I know that the White House's message is this isn't aimed at people who earn less than $400,000 a year, and that's great spin, but the truth is, if you raise capital gains taxes and some of the other moves they're looking at could hit anybody, regardless of your income.
Well, that's true, Matt, but, it's the people, the high-income individuals who invest in the market directly and who would be hit by any increase in the capital gains tax. People at lower income levels don't usually have capital gains. We may see a difference in that in the whole retail brokerage craze. Those people may actually get a surprise if capital gains taxes do rise.
Marty, I want to shift from domestic policy to foreign policy because Secretary of State Tony Blinken is just met with his Japanese counterpart overnight. He's heading towards South Korea over the next 24 hours or so, trying to coalesce Asian allies around a common China strategy. How difficult is that effort?
Well, it's extraordinarily difficult. Look, we all know the prior administration upset the decades-long norms of foreign relations. Anthony Blinken and Lloyd Austin, Defense Secretary, have to figure out a way to provide a real framework for restoring those relations and assuring them that this isn't just a blip and that we won't revert back. So it's going to be, it's very delicate, it's going to be difficult. I think all sides want to see some normalcy, but it's going to take quite a bit of time to repair those relationships.
And it's not just our relationships with our allies, but also the U.S.-China relationship that is in focus. And of course, Blinken and Jake Sullivan are going to be meeting with Chinese counterparts in Alaska later this week. How could that redefine the relationship between the U.S. and China and what it's going to look like under the Biden administration?
Well, I think the Biden administration has perhaps surprisingly shown that it wants to continue to push back on China's moves in the South China Sea and regarding Taiwan. But the question is, can they find lanes to cooperate to repair those relationships on trade, on environment? And I think that's where Secretary Blinken is going to concentrate.
Marty, how's the Republican Party doing? I know there's been a lot of speculation about what President Trump does next, but have they tried to, coalesce and kind of unite behind a main figure, or is it still a little bit dispersed?
It's interesting. I was thinking about this coming in this morning. You do not hear a unified Republican response to what's happening in the Biden administration, and I think a lot of Republicans are a little reticent to get out in front of Donald Trump, waiting to see what he says and does. So it's muted, and clearly the GOP is divided, and until they can figure out just who their leadership is, it's going to stay that way, and to the advantage of the Democratic administration.
Marty, thanks so much. Marty Schenker there, a Bloomberg News editor-at-large, and of course covering all things politics. Now, coming up later today, Nobel laureate and former World Bank chief economist Paul Romer. I know he'll have a thing or two to say about inflation expectations. That interview at 12 p.m. in New York, 4 p.m. in London. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us. And Tom, actually, my really pressing question is, what are you going to spend your stimulus check on?
Oh, my stimulus check, it's already spent. Trust me. It's we're going to move up and down Madison Avenue, and it will vapor into.
So you're spurring inflation.
Serious issue. I mean, this is a huge, huge deal, Francine. It began to percolate on Saturday with rumors that checks were already out, of course, unsigned by President Biden. And it'll be really interesting to see how this goes. And, I'll be talking about it in an hour here with John Farrow and Lisa Abramowitz, Deutsche Bank, out with an important research piece this morning on this. And we're going to talk about this boom economy. Let's look at a chart right now, which puts the stock market in perspective through the boom economy since 1942. This is my greatest chart. This is the Ibbotson chart from Yale University. I use the Dow, the depression, and the volatility over on the left. And then in 1942, there is a lift, and off we go all in all. And that puts in perspective, Francine, where we are in the trend. We're not as trendy as 1999.
Well, we're always trendy, but maybe the market is less trendy. I also have a great note by HSBC, Tom, basically looking at U.S. inflation. The idea is that, inflation, because of the stimulus, could actually peak in the spring because people go out there and buy things and are excited. But by the end of the year, certainly HSBC is expecting central banks to be a little bit underwhelmed in terms of inflation expectations.
This word is transitory. That's going to hear a lot about that here, not off this Fed meeting. I'm more focused on April 28th meeting. It'll be one of our themes today. Bharat Ramamurthy will join us from the White House. Looking forward to that. Always important to speak with Afsana Beschloss, who is absolutely outstanding on some of the political economic ramifications worldwide, and no doubt China will be touched there. And Mr. Isaacson will stop by. He has a really new and different book. He's dived into Leonardo da Vinci. Francine, I know you were mentioned there on page 300, or your family was long ago in Genoa, this time on genetic modeling. Walter Isaacson to join us out with an important new book.
Yeah, I think Botticelli was actually sold for more than Beeple. So we're looking at Botticelli and Beeple. This is so 2021. Tom Keene, thank you so much for co-anchor there of Bloomberg Surveillance. Now, there's quite a lot of other things we're watching. Matt, what are you watching?
I'm actually watching China, Francine. It's interesting that the clampdown on tech stocks, which I was initially reticent to have any feelings about, but you pushed me there. It's really hitting hard. This is the Hang Seng Tech Index falling down below its 100-day moving average, and I'm not sure if this is a warning or an entry point, as Ray Dalio warns people to put their money elsewhere, buy other stuff outside of U.S. dollar-denominated assets.
Yeah, I'm really interested in the China tech story, Matt. I have been basically this entire time, but glad that it's starting to catch your interest as well. What also has my interest this morning, the economic data, U.S. retail sales for February coming in 8:30 a.m. Eastern time. And remember, in January, it was a blowout, came in at 5.3% growth relative to expectations of just 1.1%. Now, of course, that had to do with the December stimulus. We're in kind of an in-between on stimulus right now, but there still may be room for an upside surprise. And in a market which is focusing on each and every economic data point and how it feeds into that growth and inflation narrative, certainly some numbers to watch in about 2.5 hours time, Francine.
Yeah, I'm not sure what I'm watching anymore, Kaylee, because I know you sent this really cool story with Elon Musk saying that he was going to put on sale this song,
it's
which
like a
is
techno
kind of cool
disco song.
if you're
We
like
could
a
dance to
Gen
it.
Z. I mean, you could for, the very modest price of 20 million. So he's actually selling it online, and we kind of look at the art world and really wonder whether this is the kind of the new frontier. But I also want to know, Matt, about electric car vehicles. I mean, is Volkswagen going to be able to do it and kind of be spearheading that movement in Europe?
You know what? It's so cruel to bait me with an NFT discussion and then bring me back to cars. Now, I love cars. I talked to the CEO of Volkswagen this morning. They should start to sell NFTs connected to the idea of electric cars. I'm going to talk to the CEO of BMW tomorrow, so there's a lot coming up on the car front.
Okay, an NFT linked to electric cars. I feel like this is going to be our main story tomorrow. Coming up a little bit later today, also a conversation with the Santander Executive Chair, Anna Botin, on equality in finance. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Right now is this unfolding growth surprise, which I don't think we have sort of fully baked into numbers.
We're going to get this powerful cocktail of a healthier economy and an economy that's fiscally stimulated.
I would emphasize a lot of that as a burst of growth. So we're going to transition from fiscal support to fiscal drag very quickly.
For the most part, we've gotten price stability, and we've gotten exactly what central banks wanted, which is low and stable inflation expectations.
Inflation we expect to be messy, and that's ultimately going to keep the Fed on the sidelines.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
You can smell the capitulation from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures just off all-time highs. But, Thomas, the theme of the last several weeks, higher forecasts for growth, for yields as well.
Well, readjustments as Global Wall Street tunes into us on radio and TV. It's about what research is publishing. Hooper and Folkert's Landau at Deutsche Bank, John, reset the bar 2 to 2.25%. But the key phrase, John, is this summer. That is like tomorrow.
225 over at Deutsche Bank, Tom, and 195 over at JP Morgan, and maybe growth peaks in what? Q2. What interests me at this point are the strategists that are starting to lean the other way. Morgan Stanley's Mike Wilson on small caps. He went long in April of last year, and now he's telling investors to maybe reduce that position. And, Tom, that's where I think things get a little bit more interesting. Yields high, yes. Growth forecasts high, yes. But has that story peaked, or is it peaking in the next month or so?
Well, that's the game of Wall Street, which keeps people on the bid and on the ask. John, I looked up transitory on Merriam-Webster, and the big bet of transitory inflation and transitory angst. Merriam-Webster quotes John Cochran of the University of Chicago as their use of transitory. That's pretty impressive. I would say that's a more recent word.
I imagine we'll hear a lot more of that tomorrow, Lisa, in the news conference as the two-day FOMC meeting begins.
It's Chicago's fault, Lisa.
Yeah, well, yeah. I would argue that we are going to be hearing a lot of that. How is the Fed going to parse through the economic boom while also maintaining easy money policies? I will say, I think it's interesting, John, the point you bring up, which is where are we in the cycle? And you've raised this question, but really the discussion about from Morgan Stanley about perhaps fading the small cap trade really speaks to that. If you're following the monetary stimulus, if you're following the fiscal stimulus, have we already gotten the bulk of that? And is that behind in the United States?
How quickly does this cycle move will be a theme of this program as well. Quick is the short answer. From New York this morning, good morning. Here's the price action this Tuesday morning. Shaping up as follows. We pull back just a little bit from all-time highs on the S&P 500, down one single point. In a bond market, your 10-year 159.86, just in and around 160, stable. Muted price action in foreign exchange as well, Lisa. Euro dollar 119.29.
Yeah, kind of a stasis as people try to figure out where we are in the cycle, where the European Union's going to come in when it comes to the vaccines, and then the monetary impulse in response. In the U.S., 8:30 a.m. Tom, you have explained this very well, that this possibly is more important than the jobs report. Yep. U.S. retail sales for the month of February, we're actually expecting things to decline, and this comes on the heels of some weather that was definitely disruptive. And it also comes after an incredible upward surprise in January of more than 5%. The key question is, when do we start to see those stimulus checks bear into the economy and in force? Then at 10 a.m., I am watching this closely because it pairs both the supply chain issues that we've seen throughout manufacturing, throughout the world, frankly, with this goal to bring manufacturing back to the United States. The Senate Finance Committee is having a hearing on the effect of the tax code on manufacturing. We can add into that perhaps some political posturing when it comes to how to pay for the additional stimulus plan for later in the year. And then at 1 p.m., Tom Keene is all over this. Bond auctions, 20-year treasuries are going to be sold.
Another one?
$24 billion.
It just never ends.
Yes, it never ends. But, John, I think it'll be key to watch the foreign involvement, the other independent parties. We've got the tick data yesterday, which actually showed that China increased their holdings of treasuries to the highest since 2019. So foreigners are buying, despite some of the concerns about higher inflation as well as the deeper deficit.
I mean, Lisa, in the Derby, John and I closed down a bar there Saturday afternoon as the tots were taken out by Arsenal. But other than that, the first thing John said to me over the weekend was the buzz of Soho. John, we heard that yesterday from Tom Colicchio, the wonderful restaurateur. We heard that after you went off to one of your other properties, and he was heated about the buzz in restaurants. John, that's as good as any indication we'll get from retail sales.
People are not waiting for the president to tell them when they can see their friends, Tom. Let's be clear about that. Soho was buzzing. New York City was buzzing. Do you know where there was not a buzz? Across Europe. Tom, the UK's had a great vaccine rollout. The UK's still shut down. Europe's got some real problems, and we'll talk about them through the program. The problems around the AstraZeneca vaccine, and now it's pretty much all of the big European nations pausing the use of that, Tom. And we've seen the supply issues, and now we're going to have real issues around acceptance, given what we've seen play out over the last couple of days.
And the single headline there for our American viewers and listeners is Sweden saying no to AstraZeneca here. What, John, in the last 6 hours? That was really the final shoe to drop.
Germany, Italy, France in the last 24 hours as well, and that's a big problem for AstraZeneca and the vaccine rollout more broadly across across the continent. Let's bring in a man that knows Europe just as well as anyone. It's Jens Nordvig, Exante Data founder and CEO. Jens, this is where we want to start this morning. So many of these stories are well known. Europe struggling, the US flying. And a question we've asked for the last couple of days, how well priced are they in your world in foreign exchange?
Yeah, so in the introduction, you talked a lot about all these signals of optimism in the US that have sort of been around for a while, and it's no surprise that we have a pretty big stimulus package coming out. But in Europe, I think we're still waiting for the all clear, right? The vaccine rollout has been disappointing, to say the least, so far. And we even have spikes in cases here in the middle of March in many countries, right? So we don't have the all clear, and we certainly have not had the reopening yet. So I think in terms of us really pricing aggressively sort of a global reopening, that's still something that's probably going to happen in the next 1 to 2 months. So I think in terms of the catalyst for a further lift to global risk assets, it's kind of come from getting confidence that the vaccine is working in the UK, it's starting to work in the overall EU, and these spikes that we're having in Latin America, even in India, are going to get under control as we get vaccinated and perhaps have to take other measures to get through those peaks. That's going to be the final catalyst that the big global reopening is here. It's not just in Israel and the United States that we're heading in that direction, but it's really in most countries. And that's what we're waiting for here still.
You would think that would lead to profound dollar weakness, Jens, but of course that complication has been introduced at the start of the year that Europe's really struggled, and the issue around the dollar has become a whole lot more complex. Do you think we've seen the move from 123 to 119? Was that it? Was that it? Was that the complicating factor? Europe vaccine struggles, euro dollar 123, 119, or still more to go?
Well, I think you're right to say that the dollar outlook is complex, right? Because we had a period where it was about global growth looking better, and it was about the U.S. current account deficit widening dramatically, as we had a lot of spending in the U.S. as opposed to other countries. And we had a period where interest rates in the U.S. were just locked at zero, and there was no speculation about any change to that, right? And now we've had tremendous volatility in the U.S. yield curve, so we have some offset to those dollar negatives, and we're digesting it. We have a pretty important meeting at the Fed tomorrow where we're going to get into that more. So we're sort of in a period of indigestion. I would say also like systematic traders in the FX market got very, very short dollars going into this year, and they're in the process of reducing that short exposure. And you sort of asked, are we done with that correction from 120-something down to 119? It could be that there's a bit more trimming in position to be seen, and we can have a further leg down in the euro. And we could even have a situation where that kind of fits with the news cycle where, okay, we have that positioning adjustment, the news is still negative, and then getting into April, the news will actually start to look better. April is really important for Europe because we have a huge BioNTech plant that is going to start to produce a massive amount of vaccine in early April. So from that perspective, that could be really important too.
You said, Jens, that we have a very important Fed meeting that begins today, and we get the press conference tomorrow. How could this shift the narrative going forward?
Yes, so I think that this meeting is really important, right? Because in August, they had the formal announcement of the average inflation target framework and how they define liftoff was communicated thereafter. And then market have been guessing, what does that really mean in terms of what the Fed wants in terms of inflation? But we don't know for sure. It's not they've said that overshooting 2% mean we would like to have 2.1. So is it 2.1 or is it 2.5? We have to figure out, okay, how much overshooting is the Fed actually comfortable with? And I think that's what we're going to try to sniff. And if we get an impression that it's substantially more than is already priced, that's going to be the catalyst for the rate market.
Jens, I've got to go back 8 years to my book of the summer 8 years ago, which was your book, The Fall of the Euro. It's still the best description I've seen of the modern euro. How is Lagarde doing? How is she doing to take one of your chapter titles, The Theory and Practice of the ECB? Give Lagarde a Nordvig report card.
Well, so when I wrote that book and when you read it, like the key missing bit in the euro construct was that there was no sort of common fiscal capacity. And we've created some common fiscal capacity here over the last year. The big surprise of the second quarter was we had that EU recovery fund that we call Next Generation EU now. And don't forget, Lagarde used to be a fiscal policy maker. Right now she's transitioned to be a monetary policy maker. But she's been talking about that. What can she do on the monetary policy front? She can give the market confidence that they're going to be there with bond buying in the transition phase. But in order to really generate a spike in inflation expectations, similar to what the Fed is trying to do in the US, they really need the fiscal impulse to be a persistent one, as opposed to be these like temporary waves that are then met with austerity. So it's a fiscal issue. She can do her side by having persistent bond buying, but the heavy lift is going to be fiscal.
Jens, always great to catch up, sir. Good to see you. Jens Nordvig, Exante Data founder and CEO. And Tom, that book was published, what, 8 years ago, 2013, late 2013? Look at it now. Would you have said back in 2013 we wouldn't see a single rate hike through the cycle from the ECB?
Oh, no. I mean,
that's what we got.
The book was shockingly prescient as a historical construct and also looking forward. And John, you know, nobody saw these events coming, particularly this natural disaster we're living right now. But I still don't see the United States of Europe.
Not a single rate hike, Lisa, and more balance sheet expansion in the 16 months that Christine Lagarde has had at the ECB than what we saw for the whole of the 8-year term with President Mario Draghi. Just unreal.
Not only that, but they are accelerating their purchases to front load the potential stimulus in advance of the vaccine delays that we've seen in the Euro region. I don't see an exit strategy, John.
There are some problems in Europe. You can clip that and just replay it and then replay it again. It seems to be the ongoing story. Absolutely.
It's like a pendulum.
Yep, the pendulum of doom, so to speak, Tom. Coming up in the next hour, Dan Suzuki, Richard Bernstein Advisors, Deputy
That's Isaacson's
CIO.
next book, The Pendulum of Doom.
Muted price action this morning, Tom. Futures unchanged, your bond market unchanged, your FX market unchanged on Euro dollar 119.32. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Biden's plan to reform taxes will hit people making over $400,000 the hardest. The president is said to be planning the first major tax increase since 1993. The tax hike is likely to include repealing portions of the Trump administration's tax cut that largely benefited corporations and wealthy individuals. In China, a sign the government's crackdown on the internet sector is just beginning. President Xi Jinping warned Beijing that it will go after so-called platform companies that have amassed data and market power. Regulators are now said to have set their sights on Tencent Holdings after ordering an overhaul of Jack Ma's Ant Group. A health scare is creating another delay for the European Union's coronavirus vaccination program. Europe's largest countries, including Germany and France, have suspended use of AstraZeneca's shot following reports of serious blood clotting. The EU's drug regulator still backs the Astra vaccine and says its benefits outweigh the risks. And billionaire investor Ray Dalio says it's time to buy what he calls stuff instead of bonds or any US dollar-denominated assets. In a post on LinkedIn, Dalio wrote, "The economics of investing in bonds and most financial assets has become stupid. Rather than get paid less than inflation, why not buy stuff, any stuff that will equal inflation or better?" Dalio complained about tax hikes and said the US could be perceived as a place that is inhospitable to capitalism. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal time for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
What the next step is sort of looking at the real challenges that we've uncovered and identifying the ways that we can address them. And certainly, infrastructure broadly defined is a piece of that. We know that we have these really important investments that we need to make across our society, across our economy. There's a long list of needs in terms of infrastructure that, that we've been seeing over the past decade.
It's the next big push. That was Heather Boucher there, the Council of Economic Advisors member from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bramwitz, I'm Jonathan Ferro. Here's the price action this Tuesday. It looks like this. Equity futures doing nothing on the S&P 500. On the NASDAQ, we inch higher by about 0.4%. Some stability in the bond market. Yields lower by almost a basis point to 159.69. In foreign exchange, euro not doing much against the dollar. Euro dollar 119.33. If you wanted some price action in the last 24 hours, look to the airlines. United Airlines yesterday, Tom Keene.
Yeah.
Absolutely flying. The outlook, the near-term outlook for these airlines, especially into the summer, getting better and better.
Yeah. And John, you nailed it. And I know you've got we alternate the Gulf Stream on the weekends. And John, I know you've got it coming up, and I'm flying next weekend. It's amazing to be on Google Flights and actually figure out the demand there for the seats. It's amazing, John, how it's moved just in, 2-3 weeks?
I think you might be projecting just a little bit. I'm part of the masses, Tom. So I was part of the 2.57 million passengers that traveled through TSA over the weekend. Not directly part of that, but my feeling is with them, Tom. That's what we've got to anticipate through the summer. A busy airport at JFK, a busy airport in Newark and LaGuardia. Going to see a lot more of that still to come.
Well, every trip taxed, rather, except that's not going to do it. Jack Fitzpatrick joins us on the theme of the moment, which is taxes. In the old days, Jack Fitzpatrick, it was House Ways and Means. There is Richard Neal, who is from the conservative Western wing of Massachusetts. He's out where Mr. Trump does very, very well as well. Does Ways and Means matter here, or is there a new tax process?
Ways and Means definitely will matter. What matters more than the committees and Congress is what comes out from the White House at first and how closely it's tied to an infrastructure proposal. Is this a pay for trillions in infrastructure spending? Politically, how do you tie this together? But really, people are waiting on the sort of official Biden proposal rather than just relying on what he campaigned on during the presidential campaign.
Okay, the president's going to propose. The House, I believe, will dispose, maybe even the Senate as well. What happens from the movement by President Biden to act over to the first blush that we see from Speaker Pelosi?
Well, the Senate is critical there too. Biden will put out his proposal again, whether it's tied to infrastructure and how much revenue they need or want is a critical issue. But it may actually be the Senate even more than the House that determines the politics here, because they have to answer the questions: does this need to be bipartisan? Can we do it through reconciliation in a partisan way or not? Does it need to pay for it? Can we get 60 votes, which means we get 10 Republicans? If we lose Democrats, do we need more than 10 Republicans? The bar is higher in the Senate. So, you may see legislative activity out of the House, but all of this will be with an eye very closely on the politics and process of the Senate.
And Jack, we'll be tracking this for the next few months, I am sure, as they try to expedite the timeline to use the political capital the Democrats seem to have won from this stimulus that they just passed. The focus turns international. Tony Blinken headed to his first overseas meeting to Japan to talk with the constituents over there. How are we going to understand the Biden's international push better after this series of Asian meetings?
Well, the focus on Asia, talking to people in Seoul, South Korea, the focus on Japan answers that question at least partly. Leaving the Trump administration, moving to the Biden administration, we're seeing an increased focus on trying to do right by the Asian allies who have stood with the U.S. or who the U.S. has stood with before. Some of these are countries that Trump might have looked at as freeloaders and pressured them to spend more on their own defense. So this is sort of a move to reassure countries like South Korea and Japan during a time of North Korea continuing to be a threat, that the U.S. is taking a soft approach on these allies and probably not pushing them for more of their own expenditures.
Jack, it sounds great. It sounds great. What does it mean in practical terms? What are they looking to achieve, actually do?
I'm not sure you can come out of these meetings with a hard, concrete accomplishment, but calming down your allies can be a good thing. After 4 years of nerves being on end, I think this seems to be more of a process series of meetings than something that's likely to lead to some accomplishment that the Biden administration is going to tout as a major victory early on.
What do you think the ask actually is, though, from South Korea, from Japan? Is there an ask, or is it just calm things down?
Well, the ask continually is U.S. support in defense, probably questions about U.S. defense spending, international spending on international aid. I'm not sure there's a dollar figure they're going for now, but a promise that the U.S. is not going to pull out, to pull away, to move its focus away from East Asia. The big picture seems to be the focus of these meetings rather than here's what we need from you today.
Jack, great to catch up, as always. Thanks for getting up early down in D.C. Jack Fitzpatrick there of Bloomberg Government. That's the story on foreign policy. Let's talk about domestic policy. Widening the pool of eligible people for this vaccine, I think, is going to be a huge race over the next couple of weeks. We heard some utterings from Connecticut in the last 24 hours, Tom, about widening the eligibility pool over the next coming weeks. And can you imagine if Connecticut goes first, where that leaves, say, New York, where that leaves New Jersey? That's where you start to get into a race to do it quicker and quicker.
We don't play medicine here, but you see Alaska move, you see Mississippi move, and full disclosure, folks, when I got my second shot, I was absolutely blown away by the volunteer and the organization of where I was up in Fort Washington. And Lisa, why can't we do this? Why can't, if we're as organized as I observed, why can't we do this?
The question is organization versus supply of vaccine. Does each state have the vaccine necessary to distribute it more en masse without causing the gridlock that would cause people to be reticent to try again? I mean, that has been the argument, John, that basically if they say it's a free-for-all, anyone can get a vaccine, and then you try and you fail, people might get discouraged. Sure. That's the argument. So have we got enough supply? Because, Tom, to your point, it does seem like the infrastructure is built in. I mean, we know, for example, that Yankee Stadium, Citi Fields, they're all open, John.
I'm never getting a vaccine at Yankee Stadium. That's not.
Why? You a Mets fan? Oh, no.
No, it's not. going to happen.
Well, you've already been vaccinated, so it's not a problem for you.
No,
is it? And let me tell you,
John,
that's the problem right now. Other people, including myself, getting very frustrated about people
you should.
they know
I
of who has
totally
had a
agree.
vaccine. Smokers, for instance,
Just
getting ahead in the line to go and get a vaccine. Is that an underlying condition that you choose to smoke?
Could you give me one with no celery? We all agree on something. This is extreme. It's just very unique.
I'll probably get in trouble for saying that. Coming up, Patricia Musk,
John, you're already
Columbia
in trouble.
professor from New York City this morning. Good morning. Equity futures unchanged. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City for our audience worldwide, this is Bloomberg Surveillance, and here's the price action this Tuesday morning. Good morning. Equity futures unchanged on the S&P, record highs. We add some weight to that move on a NASDAQ up by about 0.4%. Story of the last couple of months, we've talked about a great vaccine rollout in the United States and a real struggle take place in Europe. So let's keep it equity focused and do this. Let's switch up the board and look at the relative banks' performance in Europe versus the United States. And you'll see something similar here. The S&P 500 Banks Index up by about 9.5%. 2.5% over the last month. The stock 600 bank sector up by about 7%. The why? Well, yields are higher in both Europe and yields are higher in the United States as well. But here's the difference. The Federal Reserve says this is a statement of confidence. Europe calls this an undue tightening, inconsistent with the outlook. So why are the banks up in both regions? So you're thinking about rates and saying, John, forget about it. It's all about rates. Okay, I'll forget about the rate story and I'll finish on this. Switch up the board. Let's go to travel. Why is the travel story the same? S&P 500 Airlines Index up by around about 22%. Stock 600 Travel and Leisure all-time highs up by about 11.6%. So we had 2.57 million passengers through TSA over the weekend in America. What do we have in Europe? UK still shut down. Europe's still struggling. Does it get any better any quicker? Now, Tom, the question I keep going back to is, okay, this story is so well known because we've all been talking about it for the last several months.
Yeah.
Is it well priced? Or are we just willing to look through the mess to a better summer, a better year, a better few years ahead of us?
There's no question the tape is looking through it with a 19 print yesterday on the VIX, and right now 20.20. That's really a new bull market point for the volatility index of the S&P 500 in recent days. This is a joy, and this is what it's all about. It's what Jonathan Farrow, Lisa Bramwitz, and I agree on. Stop and talk to smart people. Patricia Moser is one of the most wonderful economists we have at Columbia, yes. A former New York Fed official, yes. But her heritage from Carl Case at Wellesley on to MIT and Blanchard and Fisher and on to her first-rate economics sets her up is truly someone with perspective on Jerome Powell and this Fed. Professor Moser, thank you so much for joining us today. I want to go to MIT economics, which is the x-axis and the time continuum. What in God's name does transitory mean to someone that studied under Fisher and Blanchard?
Well, I was a central banker for a lot longer than I studied with Stan Fisher and Olivier Blanchard, so I'm going to answer that a little of both. Transitory depends on the market and the circumstances. Macroeconomic transitory is a few quarters. Financial market transitory is, if you're lucky, it's a couple of minutes, but maybe a day or two tops. So I think it depends on it depends on the circumstances. From a monetary policy standpoint, if we're going to talk about the Fed, I think that it's that anything that's transitory is something that they're looking at from a macro perspective, usually, unless they're explicitly talking about markets. And that means a quarter or two. And to the comment that was made a couple of minutes ago about looking through this, I think that's basically a central banker's interpretation of what's happened in the last few months. Is the reason that nearly everybody I know, and I certainly agree with this, think that this is good news. I mean,
right.
The Fed's whole point is to get the economy growing faster, real interest rates up, inflation expectations up, and both of those things have happened. Now, it's at the cost that, it's not good news for if you're a fixed income investor, but otherwise, it's actually very encouraging news from a macro standpoint.
Stan Fisher stopped the Economic Club of New York a couple years ago with a discussion of the percentage move from low yields. Are you taken aback by the abruptness of the move in low yields to a higher point, or even up to Folkers Landau's 2.25% predicted this morning?
Yeah. So it was speedier than things that we've seen the last 10 years, 10, 12 years or so. But let me be blunt. Anybody who has thinks about what I call normal monetary policy, which is kind of before 2008, this is not ridiculously abrupt. It's actually kind of stereotypical behavior toward the second half of a recession. The yield curve gets steeper. The long end leads the short end out. Inflation expectations rise, real rates rise. And by the way, risk premia at the same time this has been going on have actually gone down. I think high yield spreads have fallen like 40 basis points over this period. So this is not a sign of like tight credit and things going wrong. This is a sign of things going right.
Right, but Patricia, there is a concern about whether we could see some sort of additional tantrum. I mean, Jens Nordvik of Exante was just on, and he was saying really it will hinge this week on whether the Fed gives guidance on how far they're willing to overshoot with inflation before they start to get nervous and start to talk about rate rises. And he said it's a big difference if it's 2.1% inflation or if it's 2.5%. Do you expect the Fed to give guidance, and what do you think the reaction could be?
Yeah, I doubt that they're going to give that explicit guidance right now. Will they eventually have to do that? I think it's entirely possible that they're going to have to. And perhaps the way they'll give that guidance is through a series of speeches rather than through a formal agreement. Because based on history, my guess is that there's not complete agreement on the FOMC about how far, amongst this particular set of members, about exactly how far above 2 they would go. You know, transitory, if it's truly transitory for a few quarters, this is what we're the word of the morning.
Yeah.
Then I think they'd almost all agree that having transitory inflation at 2.5% for a while, if there are forecasts and there are excellent economic reasons to believe that's not going to last, like a reversal of supply shocks from a year ago, for example, then I don't think you're going to have a problem with the vast majority of the FOMC members. They're going to say that's fine, particularly if it gets us from under 1.5 to closer to 2% on a long run basis. That's what they're after. And more volatility, a little bit more volatility in inflation is exactly what they're aiming for. I think that the question about whether there will be another tantrum is slightly different, though. It's not that the Treasury market is completely immune from supply effects, and there's going to be a lot of supply at Treasury. Obviously, there was going to be anyway, but with the fiscal stimulus package, there's going to be a lot. And very occasionally, rarely, and it's one reason it gets so much attention, you can get real supply effects in the Treasury market. I call it the pig in the python problem. Of course, dealers are a lot healthier financial institutions than they were 12 years ago, but their balance sheets are also a bit less flexible, and as a result of the changes, and so I think the regulatory changes. And so, given that, the odds of this of having a few bumps along the way and a little more volatility than we've had recently, I think it's high. But honestly, there's been no volatility for 12 years. This is partly what everybody's expectations are, how fixed income markets should behave. Sorry to be a little bit, old school about this, but
Patricia,
I'm more worried about too much supply, like more than investors want. That's a very rare thing to happen in Treasury markets. It hasn't happened since the 80s. And I don't think it's very likely, but it's always a risk. And that's why I thought what Secretary Yellen said the other day about eventually doing something when the economy's in better shape about the fiscal deficits is important.
Well, but
Sorry,
no worries. I mean, these are all really important points, and it brings me to the Fed's balance sheet, the idea that we have the $7.6 trillion balance sheet, and there's a question of how much the Fed will operate as an absorption tool, basically, for all of this supply. At what point will they essentially monetize the debt, buying the debt of the United States, and basically it's a wash if they don't ever shrink their balance sheet? Do you think that they'll give guidance about how much they'll act in this capacity and continue to expand their balance sheet despite the incredibly easy monetary conditions that we've seen?
So I don't think they're in a rush to get out of it, because one of the things I think that's very interesting is how uncertain everybody sort of thinks, okay, this is good news about inflation, but the uncertainty about medium-term inflation is very high right now. Honestly, COVID is a completely different kind of shock than we typically have. And so understanding what the implications are going to be for prices and wages 2 years out from now is incredibly difficult to do. And so that's one reason that I think they're going to be hesitant to give too much guidance, because they don't want to give the impression they're going to, right now, this very minute, they don't want to give the impression they're going to pull back too soon. But they will give guidance. They did a pretty decent job of it when they, not the taper tantrum in 2013, but after that they learned, and they did a pretty decent job, and they're going to do this way ahead of time. And I don't think they're there yet, because I don't think the economy is strong enough and inflation isn't where they want it to be. The one thing that I will say, though, about the Fed's balance sheet is that from a dealer capacity standpoint, the Fed buying treasuries and creating reserves doesn't really help. It just sort of trades one kind of safe asset for a different kind of safe asset on the bank's balance sheets. And it doesn't sort of solve the capacity problem, the flexibility problem per se. Actually, I think what the bank regulators decide to do about the supplementary leverage ratio this month, I think they have to decide before the end of the month, may be more important there.
Something we'll focus on a little bit more in the days ahead. Professor, thanks for your time this morning. Patricia Moser there of Columbia University. Really, really interesting note just out from Bank of America in the Global Fund Manager Survey. Here's the short version. It's over. Here's the longer version. Investor sentiment unambiguously bullish. COVID-19 no longer the #1 tail risk. The worries now inflation and taper tantrums, a V-shaped recovery, including a jump in rate expectations, capitulation into cyclicals, the biggest drop in tech exposure in 15 years, Tom, and some really interesting notes and takeaways through the piece.
In all the history of this note, this is the most interesting one. The dynamics here are so important. There's nothing transitory about it. It is abrupt, John. I'm going to go to the bottom of the note where they're contrarian features. They got 4 or 5 features, but to cut to the chase, one of their contrarian trades, long tech, short banks.
Long cash, short commodities. Here's another one for you. Q&A session. Question: what 10-year Treasury yield causes a 10% equity correction? Lisa, the answer, 2%. What yield on the 10-year Treasury makes bonds attractive relative to stocks? The answer, 2.5.
Yeah, it's not that big of a gap. And frankly, we've got increasing numbers of analysts who are saying we're going to get to those points. The question I have, and it goes back to something you were talking about, John, this idea, are we already entering mid-cycle, right? I mean, some of the contrarian plays seem to suggest that the going has already gotten pretty darn good when it comes to the COVID trade. The pandemic, according to investors, is over. What's next?
We started this show, this hour, talking about capitulation. And that note right there speaks to the capitulation, Tom, we've seen.
It clearly shows Michael Hartnett's wonderful work in the pendulum of doom. There's no question about it.
Very much so, Tom.
We're not going to live this down.
Worry that things are so bad to maybe they are too good. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market's not doing much. In and around all-time highs on the S&P 500, unchanged on S&P 500 futures. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Biden pushed his coronavirus relief bill through Congress without a single Republican vote. Now he's hoping to get Republicans on board for a huge infrastructure spending bill. GOP lawmakers will have to decide whether to take part in the return of so-called earmarks, which are dedicated spending projects. Supporters say earmarks could be the key to deal-making in Congress. And a bipartisan group of senators wants to revamp the law covering tariffs used on national security grounds. Donald Trump used Section 232 of the Trade Expansion Act to impose duties without a vote by Congress. Those tariffs have been challenged both in the U.S. and by the World Trade Organization. The senators' proposal would give Congress more of a role. And Purdue Pharma has floated a settlement plan in the opioid crisis. It calls for members of the billionaire Sackler family to pay more than $4.2 billion. That would help resolve the thousands of lawsuits that drove the maker of OxyContin painkillers into bankruptcy. Meanwhile, Purdue Pharma would hand over the company's assets to a trust to help local governments suing to recover costs of the opioid epidemic. And the price of Bitcoin, well, it fell again today after a rally that sent it past $61,000 for the first time over the weekend. The largest digital currency fell below $55,000. Still, it has gained about 1,000% over the last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Working hard to make sure that we get vaccine for younger ages as soon as we can. It's probably not going to happen in the first half of this year, but we're working hard for that to be the case in the second half. And just as soon as we can run through the trials and assure safety and efficacy, as you've heard, I'm sure we are testing different doses.
Noubar Afeyan there, the Moderna co-founder from New York City this morning. Good morning to you all. Alongside Tom Keene, Lisa Bravis, I'm Jonathan Ferro. Here's the price action this Tuesday morning. You get the story so far. Equities not doing much on the S&P 500. All-time highs on the Nasdaq up 62. We advance 0.5%. In the bond market, yields in maybe a basis point to 159.69. And a huge conversation about capitulation. It's over is the title of Bank of America's Global Fund Manager Survey. It's over, Tom. Have we seen the capitulation now, and do you start to lean the other way, or do you stay with the trend of the last 6 months?
And it's a combination of research reports combined. Deutsche Bank out to 2.25%, 2 to 2.25% by this summer, John. It's a set of reports wrapped around 7% global, I should say, developed GDP. That's an extraordinary, that's an original circumstance.
This come in a really short amount of time as well, Tom. Morgan Stanley upgrading revisions to forecasts going forward. Goldman doing the same for growth. We've seen the yield call that you've just cited on Deutsche Bank, JP Morgan doing the same thing. Bank of America very constructive about the year ahead. What does that all mean for equities after we've already had a massive 6 months? From what? The end of October, early November.
And commodities pull back a little. I'd also note EM having a more difficult time. ADXY over in Europe, Pacific Rim can't get out of its way. We get a briefing now, which has become extremely anticipated for all of our viewers and listeners. Amish Adalja is with Johns Hopkins Center for Health Security and has provided just immense value to us. Amish, all of the media love the charts of cases. They're dramatic, they're emotional, they're easily countable. The pros look at deaths and hospitalizations. When would you assume the public will finally shift onto your territory of death and hospitalization dynamics?
I think they're already starting to, as they see that people are getting vaccinated, as they don't hear about hospital capacity problems anymore, as they realize that nursing homes have been vaccinated. I think they're starting to understand that the concept really is not to get to COVID-0, but to tame the virus, to defang it so that it doesn't have the ability to cause serious disease, hospitalization, and death. And I think they're going to get there because eventually that's all everybody's going to be looking at, because this is what flattening the curve has always been about, is being below hospital capacity. And if you're in that position, we're dealing with a very different virus than we were a year ago. And I think that it's going to take some time, and the media is going to have to report more on that than they are on cases, and it's going to be a shift. But I think it is going to occur, and it is starting to occur.
Doctor, as more attention is drawn to that, people will ask whether we can aggressively broaden the eligibility for vaccinations. Do you think we're at that point right now?
I do think we're starting to see states get broader. We've heard about Alaska broadening. There's other states that are now broadening eligibility. It's just a question of being supply constrained right now, and the supply is going to get better. Each day it gets a little bit better as we get closer and closer to delivery dates for Pfizer, Moderna, for Johnson & Johnson, for bigger amounts of this vaccine. So I do think it's going to be a point then we're just vaccinating anybody that wants to be vaccinated, as the president said, can make an appointment in May. And I think we're looking at summer, hopefully a little bit earlier than that, late spring, where that can be the case, because that will really get things completely back on track, and we'll see the clear trajectory out of this pandemic.
Doctor,
it's
already sensing frustration among certain people, including myself, and I'll be very open about that. The idea that smokers in certain states have seemed to jump the line. A choice to smoke has given you the opportunity to get a vaccine before people who have chosen not to smoke. What's the best way of dealing with these issues?
You have to remember that the vaccine is about really decreasing the pressure on hospitals by vaccinating high-risk individuals. So when we look at this as a public health problem, they were trying to say, how can we stretch this vaccine supply the best so that our hospitals never get in trouble? So if you're a smoker, you're more likely to be hospitalized. So it's not any kind of personal approval of your behavior. It's just your behavior puts you at risk for severe disease. We're worried about hospital capacities. We're worried about ICU beds. So we're going to give you a vaccine so hospitals don't have to worry about you. That's how I put that to people in the air.
Dr. Adalja, in the meantime, over in Europe, you have a growing number of countries suspending the use of the AstraZeneca vaccine. What's your view on the efficacy of this particular inoculation and whether it ought to continue to be distributed?
I think it should be continued to be distributed. We've seen tremendous success in the United Kingdom with this. It's actually approved in Canada as well. This is a vaccine, uses innovative technology. I think they've had some difficulties with the EU, difficulties with dosing, and now there's been some reports of blood clots, but they're not above the background rate that you would expect in a population that's been vaccinated. And I think this is just one of those spurious associations, and people need to be explained that just because something happens after a vaccination doesn't mean that it's been caused by the vaccination.
Okay, we're going to stop the show. This is really, really important, Dr. Adalja. Are you telling us that the uproar in Europe, nation to nation, about the AstraZeneca vaccine is overdone, or the uproar is off the mark or incorrect?
All of the above. I don't think that this is justified. Other countries like the UK have not suspended this association with blood clots. Everyone has looked at the data so far and has said this doesn't look like it has a biological mechanism. It is not above the background rate of what you would expect in a population that big. And this is something we see with vaccines. When you give them to large populations, certain things happen. It doesn't mean it's caused by the vaccine. It's important to look, to understand, and try and figure that out. But I don't think in the midst of a pandemic where people are dying, where many European countries are going into lockdowns, that a vaccine that's been proven to be highly effective in the United Kingdom should be suspended. I think it's the wrong decision.
Doctor, we appreciate your time, your insight, your perspective as always. Dr. Amish Adalja there, Johns Hopkins Center for Health Security Senior Scholar. What's interesting about this moment, Tom, in the last 24 hours, I've heard more of what Dr. Adalja just said from the medical community on the AstraZeneca vaccine than I have from elsewhere. It's the politicians in Europe right now that are holding this up, seemingly more than the medical community. So we're going to have a couple of things. On Thursday, I believe, we'll hear from the European Medicines Agency, which may give a final recommendation and push back from what we've heard from some of these nations over the last 24, 48 hours. And I believe we might hear even from the WHO again on this issue after we've heard pushback after pushback from what we've heard from France, Italy, Spain, Portugal, the Netherlands, Sweden. I'm losing count, Tom.
Well, there's no question about it. I mean, what Dr. Adalja said there, folks, I'm sorry, John, that is huge, huge news to have someone of his esteem just say Sweden and Germany are just flat out wrong. I mean, what do they do in the coming days and weeks when pros like him are saying you're just flat out wrong?
And the thing I'm struggling to understand right now is how much this bleeds back on the United States. I will get my words out. But there's a question. I mean, how much can the U.S. get to herd immunity and continue to open their economy and reach full tilt when it comes to the global growth when you have Europe that's not participating, John? And this is really the question. If there is now vaccine hesitancy that is fueled by the politicians and some of the rhetoric around the AstraZeneca vaccine, how do we get there?
Synchronization replaced by dispersion very quickly, and I think that's become the consensus view as well. Everything very consensus very quickly on some big, big issues. Coming up, Dan Suzuki, Richard Bernstein Advisors Deputy CIO from New York City this morning. Good morning. For our audience worldwide, the story looks like this in the equity market. Record highs and unchanged on the S&P 500. Yields in not even a basis point on 10s to around about 160, just south of that level. This is Bloomberg.
half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Focus right now is this unfolding growth surprise, which I don't think we have sort of fully baked into numbers.
We're going to get this powerful cocktail of a healthier economy and an economy that's fiscally stimulated.
I would emphasize a lot of that as a burst of growth. So we're going to transition from fiscal support to fiscal drag very quickly.
For the most part, we've gotten price stability, and we've gotten exactly what central banks wanted, which is low and stable inflation expectations.
Inflation we expect to be messy, and that's ultimately going to keep the Fed on the sidelines.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It is over from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures high by 2 points on the S&P 500, all-time highs in America. And let's be clear, Tom, not my words, the words that come out of the Bank of America Global Fund Manager Survey, that this crisis is over, and that view is consensus.
Well, we're seeing it across all sorts of research pieces this morning. John, I've got to go to the markets right now and front-run your data check with a VIX 20.13 and a bid. It's not only that there's a bid right now to the Dow and the NASDAQ, it's that there's no ask. They refuse to go down, John.
Yields are higher, Lisa. The outlook for growth is getting better and better, and that's the view of seemingly everyone that comes on this program. So now we have to talk about how well priced that story is. That's the rhetoric. What's in the market?
Yeah, and how much does that affect what's going on in equities? And I think that's what that It's Over Bank of America Fund Manager Survey really spoke to, this idea that we've shifted away from the recovery and now we're entering the second phase. What will that bring? At what point do higher yields cause a further decline in equities?
I always feel nervous saying it, Tom, so I'm just going to re-emphasize. That was a quote. It's over. It's not my view that it's over.
Why do you think it's over?
The view of everyone else says it's over.
No,
in
but
the market.
This is important. Look, this is really important, folks. We're on radio and TV. We're trotting out all these macro babble. And the bottom line, John, is the micro babble, including retail sales today, we hope, will lead to that movement to better GDP. Frankly, airline seats are countable and they're constructive.
The bookings are getting better if you hear from the airlines, particularly United Airlines yesterday. That stock up big time after a busy weekend through TSA here in the United States. Elsewhere in Europe, still a struggle. Here's the price action as we count you down to retail sales 90 minutes away. We look like this in the bond market. 10-year Treasury yields doing nothing. 159.86 on 10s. In the FX market, euro slightly firmer. Euro dollar 119.46. And in the equity market, got to say, really muted price action this morning as we count you down to a Fed decision and news conference with Chairman Powell tomorrow. S&P 500 futures, Lisa, up about 2 points, up not even 0.1%.
Yeah, and I will say, when you talk about the Fed meeting, there are a lot of potential outcomes. The policy uncertainty at this point is pretty stark. And Tom, you were talking about retail sales. We're going to be getting that data out at 8:30 a.m. It isn't necessarily going to show that pop in economic growth that people are expecting. There's actually an expected decline in February retail sales on the heels of the disruptive weather across particularly the West. Key question is, going forward, how much do we start to see some of those stimulus checks percolating into the expenditures, and how much more firepower do people have? Then at 10 a.m., I'm really watching this. You're going to see the Senate Finance Committee come out with a hearing on taxes and how it affects the supply chain. Manufacturers are coming out. They'll be arguing, I'm sure, for tax breaks. There also will be discussion about tax hikes across the board, given the fact that the U.S. wants to spend so much money on infrastructure and other types of programs. And then today, 1 p.m., we've got that 20 20-year bond sale at a time when we do have the expectation of rising yields. How much demand will there be, and from whom? Hedge funds had one of the biggest months of Treasury sales in January in a long time, John, and it raises a question about who steps in at 1.6% 10-year yields.
There's the doom. There's the gloom.
There it was.
Lisa, thank you.
No one's going to show up to
Who's going to show up?
Imagine, John, what she would be like if we had a 50-year peace in America.
I know.
John, can I jump in with a research piece?
Yeah, after Lisa's covered the gilt market.